अभी से क्लब ऑफ Lions Club of Vidya Vihar, Vision for India, Lions Club of Ghatkopar. I recognize the presence of GSTPAM Association's President Sri Alok Bhai Mehta, Jitendra Bhai Chatakia from Jalajim Thana, Bharat Kanabar from Vision for India, Sunil Khudsilani sir from GSTPAM Association, Mr. Krishna from Free Forum Enterprises, and others. I welcome you all. Now, without wasting much time, I request Alok Bhai to take a welcome. Thank you.
Thank you, Bhavin Mehta. First of all, welcome to all of you. I recognize the presence of my Vice President, Sunil Khudsilani ji, the OBs of the Ghatkopar Forum of Free Enterprise, and all the esteemed association. It's a long time that after that GSTPAM also joining with the hand for the public union budget meeting. I thank you all of you for your active participation. Thanks to Bhavin Mehta and Jatin Chheda in person for organizing this event. Friends, that you know that in the budget has already out, and as far as indirect tax is concerned, I think nothing more has been given. But I always feel one thing that like in income tax, wherein that filing of the revised return, the government has extended for 2 years. If this could be given in GST for filing the revised return, I think this would be a much better position for all of us for a smooth conduct of GST. And I think we need to represent all of us together. From the GSTPAM, we are already going to already represented. We are going to much give push to all this thing, and all of it come together so that at least on the GST front we get the revised return, so that like the MVAT, we can get the more smooth compliance for the GST. Like that, other amendments are there. We have with us today our faculties, Ms. Piya Madam. I welcome Piya Madam for the economic affairs. Mehul Bhai, always as usual. I welcome Mehul Bhai for the direct tax, and Rajiv Luthia, our member for the indirect tax. I think I welcome to all three faculties. Thank you very much for accepting our invitation for delivering the talk on this subject. We had met yesterday to the Piyush Goyal, the Union Minister of the Commerce and Textile. He has also deliberately, given the talk on the budget, which was very responsible budget. And this budget, basically, I feel that it is more on infrastructure, development of the infrastructure and all. Less they have given for the indirect tax, something they have given for the income tax, but more on development of the infrastructure and health related. So let us see the analysis from all these three faculties. So once again, welcome to all of you. Enjoy your Sunday with this all three faculties. Hope these faculties will enlighten us for this budget, and after this, I think we are through with this budget very properly. Thank you very much once again, and all the best to all of you, all the association OBs. Thank you so much for joining, and all keep joining. Let's make this our association and bonding much active and prosperous. And all. Thank you very much. Over to you, Bhavin.
Thank you, Alok Bhai. Thanks for your nice welcome and recordings. Thank you. Now I request Jatin Bhai to introduce today's speaker, Piya Madam, please. Jatin Bhai, volume, voice.
Sorry. Thank you, Bhavin, and thank you, Alok, for a nice welcoming. So the today's session's first speaker, Ms. Piya Mahtaney. She has completed her second master in development in economics from Leicester University in England. She has embarked on her career in journalism with the Times of India. She was assistant editor in Metropolis on Saturday After, which she has joined as a senior feature writer in Economic Times. As an economics that report, analyze, and hold on the wide range of a socio-economic issue, writing about economics development and emerging trends of the globalization seems almost inevitable. She has authored a few of the books, such as a structured transformation, understanding of a new drive of investment, innovation, and institution in Singapore, globalization and sustained economic development, program mechanism in US in August 2013. India, China, globalization was published in England in 2007. Globalization Con Game or Reality was published by the Alchemy publisher in India in 2004. The first book titled Economic Con Game, Development Fact or Fiction was published in Malaysia in 2002. India, China, Globalization in 2014. Besides the authorship, She is a visiting lecturer with St. Xavier Institute of Communication and the St. Xavier College, Department of Economics. She is also a council member of the Forum of a Free Enterprise and monthly column writer of a Free Enterprise Forum. She also, beside of her academic, she also interested in classical and Western ballet. With this brief introduction, I welcome Piya Mahtaney with a loud applause. Welcome, madam. And
Welcome, madam.
we request you to take a charge and enlighten us on the economic issue of the through budget.
Yeah.
Thank you, ma'am.
Now, I request Piya madam to please take the
Yes.
question. Thank you.
First of all, I request all the panelists to kindly keep their video on so that we can take a nice click photo.
Thank you. Piya madam, please
Yes.
switch on your camera.
Yes.
Thank you.
Yes.
Yeah. Thank you very much.
Yes.
Over to you, Piya ma'am.
Yeah, ma'am, you continue, please. Now, Justin, I will switch off my camera. Thank you.
Yeah, rest of we are switching off, so entire you are there on the screen.
Thank you, ma'am.
Good morning to all. And I thank the President, Mr. Alok Mehta, for this opportunity to talk on this platform with the other co-panelists. As mentioned in the introduction, I'll be talking about some of the fundamental aspects and implications of the budget. My standpoint would be from the macroeconomic perspective. But before I actually begin to articulate my insights about the budget, I would like to take a minute and condole the passing away of one of our dear council members, Mr. Sunil Bandhare. He passed away last morning. And with sadness and deep regret, I would like to take this opportunity to condole with his family and with the Forum of Free Enterprise. And in fact, my insights today are in the memory of Mr. Sunil Bandhare, who was one of the leading economists of the country, and whom, if I may mention, has always been very encouraging, very positive about the work that I've done. And I hope that whatever the insights that I express in today's webinar, I hope that if he were there, he would have endorsed those insights. I now begin to speak about the budget. And let me just say to start with, that this was a budget that was going to be a rather difficult, a difficult set of choices. It was going to present a difficult set of choices for the finance minister, Ms. Nirmala Sitharaman. And, the main reasons for the difficult choices that she has been confronted with is because of the configuration of problems and challenges that have confronted the Indian economy for over the last 2-3 years. And not just that, and in the larger context of a global economy that is also confronted with similar problems. So she had a number of choices to make, and with those choices, she had certain trade-offs that she had to, understand and resolve. And I think that one of the main strengths of this budget is that it is without any adverse trade-offs. The choices that the FM has made, those choices do not leave any adverse trade-offs working. And this is an important aspect because she had to deal with the post-pandemic induced challenges. She had to sustain the recovery of the Indian economy that has just begun. she had to also cushion those segments that have been extremely adversely impacted by the pandemic over the last 2 years. And she has to do all this on the back of seeing and ensuring that the fiscal deficit is contained. And, over the last few weeks, when I've been looking at analysis about the budget, before the budget and after the budget. Before the budget, I remember there were a few voices who were saying that, well, fiscal consolidation at this point should not be assigned importance to. This is something I don't agree with. I think it is very important to assign fiscal consolidation importance, given the fact that inflation is already a challenge that has to be dealt with. So if you're going to not assign fiscal consolidation importance, you're going to end up with a rate of inflation that might be difficult to rein in. So I think there, it would be important to understand that she has tried to give importance to the core issue of stimulating the economy or boosting the economy while retaining the objective of containing the fiscal deficit. Now, I've been asked to also speak about the international implications of the budget. Now, but before I actually touch on that, I'd like to also say that, when we look at the domestic context and we look at confronting the challenges in the domestic context, it also means that India becomes more competitive in the international context. So the two are connected. Dealing with India's domestic challenges is also something that India's competitiveness is incumbent on. And therefore, her whole approach to actually making infrastructure spending the main pivot of India's economic growth is definitely something that is long overdue. And when I say long overdue, I don't mean something that is long overdue for her, because she has always assigned importance to infrastructure spending over the last 2-3 years, but something that has been long overdue in the Indian economy for about 1.5 decades. And therefore, the competitiveness of the Indian economy and the fact that she has emphasized infrastructure spending, this is something that are two issues that are very closely linked. Coming at a time when the world is, for a number of geopolitical factors, looking to, practically every country in the developed world and in the developing world are looking at reworking their supply chains. And India, with the competitiveness, talent, and diversified economy that it has, is that destination that can offer maximum support to nations all over the world in their endeavor to rework their supply chains. And I think this is a fact that has been considered in this budget, which is why the emphasis on digitization, on improving, connectivity, on using digital platforms to overcome certain constraints in logistics. So whether it's the digital health platform or other, applications of digitization, we've already seen the various payment platforms, the various financial platforms offered by digitization, and the finance minister is going to has emphasized that she would like that objective is taken forward. And so the use of post office, integrating post office into this whole dynamic of financial into this whole dimension of fintech and financial ease, and integrating payment platforms is one aspect that the finance minister spoke about. And one of the aspects that also which may not be directly connected to, the integration of uh, finance platforms, is also the use of digitization to ease and streamline land registration. I think that that is an important aspect. Perhaps not a game-changing big bang announcement, but one that is very important for procedural and procedural simplicity and transparency. So in the manner that she has actually incorporated certain clauses and certain measures to improve on transactional efficiency, and at the same time to use the digital platform to improve transparency, to increase connectivity, and also to overcome constraints in logistics. Take the digital health platform which she announced, and that can be game changing, because given the kind of healthcare infrastructure that India lacks, particularly in the rural areas, given the kind of data that has already come in per force because of vaccination and because of the pandemic, I think the two factors can definitely be used, be leveraged upon to create a greater degree of access to healthcare, even in those areas far-flung, the back of beyond, who do not have the rudiments of even a basic healthcare delivery system. So I think I think that one fundamental towards improving healthcare is, to see that access is universalized. And I think this is one step in that direction. Now, coming more specifically about the international context, and I spoke about the reworking of the supply chains, that is an opportunity that needs to be looked at very seriously, particularly in view of the buoyancy of exports that the Indian economy has witnessed over the last year. Some amount of reduction in customs duties have, of course, been given by the FM. But most importantly, I think this entire objective of Atmanirbharta and the localization of production, and also the fact that insofar as exports is concerned, there is a huge opportunity that still remains untapped. That is an area where I would also like to see MSMEs better integrated into global supply chains. Because we have to understand that the connectivity of the smaller, medium, and possibly the micro enterprises with the opportunities that exist for them in the international context, this integration, and I use the word connectivity specifically to indicate that these opportunities are not availed of enough by the SME sector, by the small and medium enterprises. It's not availed enough. And therefore, I would like to see, and this is one area where I felt that more can be done. And given the constraints that the FM had, I understand that it's possibly we would see more of this happening over the next few years. But I think that this is an area, a paradigm where small scale and medium scale enterprises are better integrated with the supply chains. This is a huge opportunity. I understand that India's growth is not primarily driven by trade, in as much as the growth of East Asia and the growth of China more recently has been driven by trade. But at the same time, trade has an increasingly important role to play in India for strategic reasons, for her to boost her competitiveness and employment. There is a huge employment potential that exists for India in trade, particularly in view of the present imperatives that nations are confronted with to work their supply chains. So, and therefore I said that the competitiveness of Indian exports is incumbent on infrastructure building. The capital expenditure thrust given by the FM is something that I welcome, and I was really heartened to see that she stepped up capital expenditure. The other aspect that, I would like to touch about from the point of view of an economist, I find it very interesting that what we see, actually in the budget is a reflection of what old classical, economists used to say: pump, prime the economy. Investment by the government, public expenditures towards increasing, the capital formation is an integral part of boosting an economy. And so I find that, it's very interesting, in lighter vein, if I may say, that as we head towards the next era, we are looking at the offerings and the principles of old classical economics. So this is one aspect that I thought I should mention. Now, the other aspect, insofar as digitization is concerned, coming back to that, is about the digital rupee. And there is some ambiguity about how this would be worked out. I think we would understand that over the next few months. But I welcome the principle of having a digital rupee, because if there is an avenue of speculation that is unregulated, uncontrolled, that is almost completely ambiguous, like cryptocurrency, then the best way to countervail that is to have an alternative. And I'm not positioning, because there is still not enough information insofar as the digital rupee is concerned. But I do understand that the main principle of having that is to also facilitate ease in certain transactions, and at the same time countervail unnecessary and dangerous speculative adventurism. And my personal standpoint is that when you invest in something that you don't know enough about, it is speculative adventurism. So I think that the digital rupee is an idea that is welcome, and certainly a bold initiative that the finance minister has taken. The other strength of the budget is that at a time, and I haven't seen the strength that I'm just going to talk about is something that I haven't seen in many budgets for many years. At a time when 5 states are headed towards polls, Mrs. Nirmala Sitharaman resisted the tendency to actually offer populist measures. She resisted that. She moved beyond populism to adopting, in certain aspects, a structuralist approach. So it was a budget that was fixed and focused on the long term, rather than one that offered quick fixes and SOPs. And I welcome that aspect of the budget. But what having spoken about the strengths of the budget, what I find a little lacking is, while capital expenditure and infrastructure spending would boost employment, I think that a little more could have been done in the realm of actually correcting the kind of unemployment we see in the informal sector, particularly in urban areas. The service sector, which accounts for the maximum proportion of India's GDP. The service sector has still not, except for a few areas within the service sector, such as the financial service sector, the service sector has still not been able to recover for a number of particularly contact intensive segments in the service sector from the pandemic. And while outlays have been increased towards the MSME sectors, towards relief package has been granted to the hospitality sector, which is a fairly significant employment provider. outlays towards the National Rural Employment Guarantee Scheme, Manrega, I think there, a little more importance given to that could have also helped. There was some amount of conjecture that there may be an employment guarantee scheme for the urban unemployed workers, because informal unemployment in the urban areas has increased significantly, and so there was this sense that perhaps there would be something on the lines of an employment guarantee scheme for urban informal workers, while I understand the constraints. At the same time, I also feel that outlays towards Manrenga should have been increased. Having said that, I was reading in the Economic Times an interview by someone in the administration who said that, well, if required, it would be increased. So I think that is something that we would have to see down the line. The boost to consumption, the boost to improving supply side constraints, the role that capital expenditure will play in doing both, in boosting consumption, boosting employment, and easing the supply side constraints issue. Understandably, in India, demand and supply is very closely linked. That is, if you boost incomes, you can also do that. You can only do that by removing supply side constraints at the point that the Indian economy finds itself at. So I think that is a mathematics that has been very clearly factored in the budget. But aside of that, the vulnerable segments that find themselves impacted extremely adversely by the pandemic, I think a little more could have been done to provide some solace and succor to those some of those vulnerable segments. That said, all in all, I think that this is a budget that has straddled the challenges confronting the Indian economy quite well. Now, the key to the impact that the provisions outlined in this budget would have, the key is implementation, expedient, and doing so expediently. So expedient implementation. Now, in the context of this, I'd also like to mention, and this is my last point, that insofar as disinvestment targets being revised downwards, I don't think that that is to be interpreted as anything that is not very positive, because I think that that is something that is flexible. I mean, if the government does better than the target insofar as privatization is concerned, it would be a welcome move. And at the same time, if it's understanding the constraints, if it keeps a target that is quite realistic and tenable, that is also advisable, given the fact that privatization, partial or complete, is generally a lengthy and tenuous process. And given the politics that one associates in certain instances with privatization, it's always better to give it a longer rather than a shorter time. The thinking insofar as disinvestment is concerned today is shifting a little bit to a broader objective of it being an avenue of raising resources for the government, but also an instrumentality of increasing efficiency and enabling the organization that is being privatized to be able to deal with the challenges that it would be facing over the longer term. So I think what we are also seeing insofar as privatization is concerned is a broader view rather than the narrower view of it being used to plug a revenue deficit. And I welcome this change in approach towards this investment. So to conclude, I will say that this is a broad-based budget. It's a budget that maintains continuity. It's a budget that is focused on the long term. It's not a budget that has resorted to tinkering and blinkering. And I think that is the most important aspect of the budget. Thank you. I conclude my enumeration.
Thank you. Thank you, Priya ma'am. This was a wonderful speech. Now I request Bhavin to take a further charge. Bhavin. Yeah. So now I request Charvik to give a hearty vote of thanks to me first session.
Thank you, Jatin Bhai, for giving me the pleasant task of providing today's vote of thanks for Speaker Piya ma'am. I am sure everybody would agree that the speech has correctly highlighted the constraints and the provisions for various sectors in this year's budget. In her crisp and clear speech, she has rightly highlighted the growth-oriented aspects of the budget and the various reasons for the sector allocations and the future areas where the economy can grow. We thank you for providing us the knowledge and the insights of the budget. And I would request, I'm sure everybody would have enjoyed the speech, and I would request everybody to give a round applause. Jatin bhai, please continue.
Thank you, Charvik. Thank you, Charvik. Thank you, madam. It was a nice presentation. Now I request
Miss Mamta said.
just Jatin, please.
Yeah.
Now I request Mehul bhai to come on the dais. Now I request Mamta Ben, Mamta Sheikh, to introduce today's speaker, Mehul bhai. Mamta madam, please.
Yes, good morning, everyone. Thank you for giving me this opportunity to introduce CA Mehul Shah, sir. CA Mehul Shah is BCom FCA DSA by qualification.
Face clear. And you can switch off video, no issue.
And face the window, Mamta, instead.
Yeah, please.
Yeah, can you see me now?
Yeah.
Perfect.
Yeah. Thank you. So Mehul Shah sir is a BCom FCA DSA by qualification. Is a partner of Shah and Shah Chartered Accountant, mainly handling corporate laws, income tax matter, audit on consultants and execution of sites, appearing before direct tax appeal authorities. Is contributed in various publication professional bodies, led various study meetings and seminars, national conferences. Is acted as a paper writer on various paper at RRC, past convener of Ghatkopar Study Circle, WIRC, is a coordinator at IT support for bank audit queries portal, instituted by ICAI for past 4 years, acting as a peer reviewer on behalf of ICAI as a panel member. With this brief introduction, I now request CA Mehul Shah sir to start his session.
Mehul bhai, please start the session. Thank you.
Yeah.
You have enough time to complete. Thank you.
Yeah. Namaskar. Very good morning to all of you. At the outset, I thank Ghatkopar Study Circle, along with other associations like Forum of Free Enterprises, Jolly Gymkhana, Chamber of Tax Consultants, Investor Education and Welfare Association, Rotary Club of Mumbai Ghatkopar, Lions Club of Bombay Uptown, Lions Club of Vidya Vihar, Goods and Service Tax Practitioners Association of Maharashtra, Vision for India, and Lions Club of Ghatkopar for giving this opportunity to me to present my views on this budget. For us as chartered accountants, budget primarily means the provisions under the Income Tax Act and indirect taxes. Piya madam very categorically and very beautifully explained the crux of economy, and I'm not basically an economist, so probably I'll not be able to throw more light on whatever things that she spoke on, and Rightly so, because that's not typically my job. I'll just close my window because there is some construction activity going out there. Just a minute. Yeah, sorry. So what I was talking about is on one side we have economy on hand, and other side we have direct taxes and indirect taxes that actually feed the economy in form of taxes. So ultimately we live in a huge cooperative society. The way we live in any cooperative society, we need to pay maintenance in order to set the things right for the society to go ahead with all expenses that they incur for the purpose of running and maintenance of the society. The same way we as taxpayers run this society, the country, through our taxes. So for us, from that angle, income tax and indirect taxes in form of GST and other taxes partake more importance. Right. With this little background, let me share my screen first. I have a presentation to be made that I'm sharing.
Yeah. You able to share the screen, sir? Option change.
Yeah. I'm a part-time teacher, so now I've been teaching in on Zoom for past 2 years, Pavan bhai.
Yes.
That's how it has been.
Yeah. Thank you, sir.
Okay, fine. Is the screen seen by all?
Perfectly, sir.
Okay, great.
But tomorrow thodo volume high thai to.
Sure. I'll just check. Now is it fine?
Yes, sir. Please.
Okay. In case if it is low by any chance, please just tell me in between. I'll just try doing something.
Okay, sir. Thank you, sir. You can do.
Thank you. So at the outset, let us give tribute to the great singer Lata Mangeshkar ji. In fact, we live in a world of consciousness. I'll tell you. This morning, I didn't know even that she was on ventilator. I didn't know that she is serious. I had not even seen the newspaper today. Okay. And just I was recollecting one of her songs, and then suddenly newspaper came in and I saw that she's on ventilator, and probably at 9:30 I got a message that she has left her body. And such a great soul, such a great singer. We pay our tribute to this great lady, great singer, Bharat Ratna Lata Mangeshkar. And with this tribute, I go further. It's such a brilliant hoarding that we have, that respect. Nothing in this country is free if you are getting something without paying for it. So one needs to thank the taxpayer. So we all who are actually paying taxes, either in form of direct taxes or indirect taxes, as the case may be, actually need to be thanked for, is for the simple reason that unless and until a taxpayer is there, the country cannot function. Okay, the government basically is not a businessman or person, so that they can earn money out of everything else. Okay, so primarily the economy depends on the taxpayers' money, that we need to acknowledge and understand. This is the building, the planning commission's building, and this is how planning used to be done in this country for all these years. You can see the Department of Planning itself has not been able to actually plan its hoarding. And this is how it has been happening in this country for past so many years. And thankfully, this government is there, setting the things right. In Gujarati, there is a saying that nana sathe mota sathe nano jai to mare nahi to mando thai, kind of a thing which is there. We used to run after the world, okay, and we used to import every damn thing from the world to show that we are such things. But now we are such a huge entity or such a huge country. But that is not the case. We are a great country by default. Okay, so we really don't need to imitate anybody in the world, and we just can go ahead with our own standings, our own values. And in case if those values are actually retained and followed by us, this country will progress like anything. By and large, the situation is under control and things are going well in this country. So let's hope that this continues for another decades to come and this country is prosper. This is the prayer that we make. A no uttered from the deepest conviction is better than a yes merely uttered to please or worse to avoid trouble. This is what Mahatma Gandhi ji used to say. That unless, if you want to say, even a Professor Gadgil used to say that if you want to say no with conviction. Something which is right because it is right, and something which is wrong because it is wrong, period. There is nothing else to be done on that. So be so happy that when others look at you, they become happy too.
Yeah.
This is the equality and justice. You could give an equality to people in this picture. Left side, on your left side, you could see that there is a picture where equality is given, but justice is not given. Justice can be given when a small person is given better platform, and that is how our government has been doing. So let's keep our fingers crossed and proceed. Agenda for today is pluses and expectations gap, budget at glance, rates of income tax, impact of amendments in slabs at glance. Amendments applicable to non-corporates, amendments applicable to corporates, pluses and expectation gaps. Now, see, there have been many expectation gaps also, I understand and agree to, but there are some pluses that we need to appreciate. First plus is peaceful yet bold approach to face challenges. The country has undergone severe impact of COVID-19 and the government has boldly faced the challenges. And of course, there was a lockdown for a considerable period of time. People lost jobs. People lost their salaries also. So many things have happened. But now things are being streamlined over a period of time. And things are really working well for this country from that angle. Okay. Second thing is courage shown not to give much freebies based on a particular community, which used to happen in earlier government's time when 300 crores given to this university and farmers loan were being just being written off and they were given benefits of. No, that is not the way we run the country in order to secure vote banks. Okay, so this government has been very conscious about all these things and they are discouraging all these things. They are not even following such things, which is very good. Not increasing threshold limit for taxation. 2.5 lakh was taxation limit for the earlier years. In case if you are an individual or an issuer, okay, the same limit continues. One may say that this is basically an expectation gap. Yes, it could be an expectation gap from that angle if you really think of. But if you look at from another angle, it's not an expectation gap because ultimately, if you give this basic exemption to such a large extent, then so many people, as it is in this country of around 135 crore, hardly 6 crore, 7 crore rupees, 6 to 7 crores people file returns. So there is a minuscule of people who are actually filing their returns. Okay, and if you give basic exemption or increase basic exemption to an extent, then again they would be out of the tax net. So many people will be out of tax net, which is not an advisable thing. As a matter of fact. So this is how one needs to understand that also. Then there is no attempt to make a few happy at the cost of country, which are already dealt with right now. Development plans have been there in this budget, like so many different things are taking place. Of course, there can the government could do something more than that also, but yet within the available limited whatever means that they are trying to do it. Just a minute. Then exemption of amount received for medical treatment on account of death due to COVID-19 death or compensation as the case. We will be dealing with this in short while from now. Even that is another thing that has actually, it has been a very good thing that people, they have boldly given exemptions to all those people who have been victim of COVID-19. And litigation management is another thing that this government is actually looking into. A serious attempt is made by the government in order to reduce litigation. That is another plus of this finance bill. On the expectation gap side, what happens is there is no endeavor to reduce fiscal deficit and interest burden. Now, for last 60 years, we have been witnessing that our GDP has been increasing, but at the same time, our fiscal deficit and revenue deficits have also been increasing. At the same time, interest burden is increasing considerably, and there is no actual attempt in order to reduce the interest burden. That is the expectation gap that I have. Because I agree that you need to boost economy. In order to boost economy, you need to spend money out, etc. Exactly, I fully agree. No second thought on that. But so long as you are not in a position to increase onto your receipt side, how many years you will go on deficit financing? You'll print currency and give it, print currency and give it. What usually then happens is it ultimately increases the burden on economy in form of inflation. So that is another thing that needs to be taken care of, that interest burden somewhere or the other, somebody will have to look into it and reduce it. Other expectation gaps, for the second time, there have been some retrospective amendments, but this time it is not a vindictive approach that usually earlier government had to, whatever retrospective amendments that were made were with a vindictive approach that मैं छोड़ूंगा नहीं तुमको, that kind of a thing was there. This year also there have been some such sorry amendments or disturbing amendments to an extent which are actually not in good sign for the businesses. Okay, but just in order to prove the point right of the income tax department that we will not lose, we cannot be lost, we cannot lose. That is the way they have actually what you call gone ahead with certain amendments, which is an expectation gap. Then just a minute, I'll just put this phone on silent. Yeah. No significant relief has been given on personal taxation, but as I said, fine, it could be an expectation gap if you look at it. I look at it from another angle, that no significant personal taxation benefit did not be given because adequate benefits are being given to the people around. Okay. Then complex structure of personal taxation. This is what is bothering all people, that the taxation, it has become a kind of monster law. You know, it has become so complex a law that when you are actually looking at the law and trying to understand, interpret it, it becomes too much of a thing. Okay. So that is another thing that needs to be somewhere looked at in order to make it sure that actually the economy grows and the people are also happy to pay taxes. See, ultimately, Chanakya also used to say, okay, how do you tax people? You tax the people the way that वो भौरा आपके इधर आता है, उधर बैठता है, इस पे बैठता है फूल पे, जैसे ये मधु निकाल लेता है, चला जाता है, फूल को कोई फर्क नहीं पड़ता. Same way government should come here, tax us and go, but we should not feel a pinch of paying taxes. When we are in a position to bring this position that the pinch is not felt, yet I am paying my due taxes, then actually we win the battle. You look at USA and Canada, of course, there are so many, the tax rates at USA and Canada are much larger than what our country has. In USA, the tax rate goes as high as 45%. Some of us will say that, yes, they get security, social security benefit. What do we get? Yes, we are a huge country. We have our own set of problems. So you cannot, I'm not comparing USA with Canada, US and Canada with our country. Okay, but you look at the situation, Canada, in current situation also, Canada does not have proper medical facility despite the fact that it's a huge country. Okay, and if the moment there is an outbreak of COVID, they immediately announce lockdown. My nephew and niece are staying at Canada, And just before a month or so, I'm not aware about current situation, but month or so, again, there was a lockdown imposed because they do not have the adequate medical facility that is required for this country, for their country. Okay, as compared to that, despite having such a huge country, such a huge population, and with so many other limitations that we have, yet the government has been able to fight the pandemic in a fantastic manner, which is commendable. Of course, state governments have also done well in this case, and full marks to them too. Okay. Then no endeavors to reduce government spending. Of course, as I said, government spending is essential, but ultimately somewhere some expenses which are useless or less important needs to be controlled. That needs to be done, which I feel so. And another thing is heavy compliance burden under TDS and information returns is being imposed a year-on-year basis on the taxpayers. And ultimately, at whose cost and will something is being done, because ultimately taxpayers always feel that when I'm contributing so much to the country, in case if I'm not able to get the fruits out of it, why should I be paying the taxes? This is what the feeling is. And on the other side, government is feeling that the people are not paying taxes. So this is where the expectation gap is there, and because of that, both the sides are stretching so far that ultimately it is the country who loses. Okay, the taxpayers do not want to pay taxes because मुझे क्या मिलेगा, मैं इतना भरता हूँ, मुझे मेरा क्या. That is the feeling, and government says that nothing doing. I am here to tax you. I'm here to run this country. I need money. Okay, so this somewhere needs to be at least balanced down, and this is what it is. As far as the receipts and payments of the budget are concerned, let us look at these particular things which are very important to understand. Okay, as I said, I'm not basically an economist, but I understand the numbers. Okay, so these are the first column, basically 16 lakhs 33,920 crore rupees are fundamentally the actual revenue receipts of last year. 2021 or not 1920 typically. Okay, and the budget estimate was 17 lakhs 88,424 crores, and the revised estimate was 20 lakhs 78,936 lakh crore rupees. Right now, what's happening is you were budgeting 17 lakhs 88,000, which is now which was a revised estimate was 20 lakhs. Actually, you could the draw on or get only 16 lakhs 33,920 crore rupees. Okay, and yet you are budgeting 22 lakhs 4,422 crore rupees for your revenue, of which taxation side is 19 lakhs 34,000. Actual taxation side you are getting is 14 lakh 26,000, but you are still budgeting 19 lakhs 34,000 lakh crore rupees, which is impossible to get. You know pretty well that you are not going to get it. Okay, 5 to 6 lakhs rupees, 5 to 6 lakh crore of rupees you are estimating taxpayers to pay you is not going to be possible. So what's going to happen is that your non-tax revenue in form of grants and loans, typically not even grants but the loans, they will increase ultimately sizably. Okay, so on the capital receipts side, what happens is that your recovery of loans and other receipts, which are 60, means we are budgeting, means actual receipts are 37,000 crore rupees, and you are still budgeting them at 65,000 lakh crore of rupees, which is not going to be possible. And in order to show less borrowing and other liabilities, which actually is 18 lakhs 18,291. You are projecting that 16 lakh, you'll be borrowing 16 lakh 61,196 crore of rupees, which to my mind will have to be increased for the simple reason that your tax revenues are not going to be sizable increasing. 14 lakhs 26,000 crore rupees in case if you are budgeting or if you are actually getting in last year, then probably 10 to 20% more you can budget, but not more than that. Okay, so that is going to be another hurdle for this government also to bring deficit, this fiscal deficit and revenue deficit in control. On expenses side, if you look at it, your revenue account, your capital expenses are going to be to the tune of 39,44,000. On revenue account, I'm sorry, that is the total expenditure. On revenue account, you're going to spend 31,94,000 crore as against 30 crores, 30,83,519 lakh crore of rupees. Okay, so that is another thing that you need to understand, that despite having less income, we are projecting more expenses. Interest burden was 6,79,869. Against that, now it's going to be 9,40,651 crore of rupees of interest burden, which is again an alarming situation for the government in this country, which needs to be taken care of. Grants and aid and other capital receipts. So effectively, your revenue deficit, which is actually 7.3% of GDP, is projected to be 3.8% of GDP. But if this continues, that revenue deficit will should be more than what is expected. The same way fiscal deficit, which was 9.2%, is projected to be 6.4%. Again, it's not going to be achieved unless and until we put a check on the unnecessary expenses, including interest payments. Interest somewhere or the other, this government will have to take care of. Despite the very simple fact, I'll just share an anecdote with you all. It's an anecdote of Sherlock Holmes, which I just I read it much earlier, but I just recollected after looking at these numbers. So basically, Sherlock Holmes and his friend, they go for a camp, and in the midnight, the Sherlock Holmes is waking up and looks at the sky, and then Dr. Watson, his pal, just tells him that Dr. Watson, get up. So Dr. Watson gets up and says that Sherlock Holmes says that, what could you see? So Watson looks at the sky and says that I see millions of stars. Then Holmes says that what does that tell you? Dr. Watson replies that astronomically it tells me that there are 3 millions of galaxies and potentially the billions of stars. Astrologically, I observe that Saturn is in Leo. Horologically, I see that I deduce that the time is approximately 3:15. Technologically, I can see that God is all powerful and that we all are small and insignificant. Methodologically, I suspect that we have a beautiful day tomorrow. What does it tell you, Holmes? And Holmes says that for Holmes is basically keeps silent for a moment and then says that, idiot, somebody has stolen our tent. So this is the kind of position that the country may have to undergo rather, in case if we are not checking on all these expenses, the tent will go away and then we'll be struggling out. So with this objectives of budget, basically, I'll just go to the highlights. There has been no change in tax rates, surcharge and cess. They will continue as it is. There is a reduction in surcharge as well as alternative minimum tax for cooperative sector. Voluntary contribution for renovation and repair of temples, mosques, gurudwaras and churches, etc. They are given a corpus status. We'll be dealing with this shortly. Exemption of amount received for medical treatment on account of death due to COVID is another thing. Then litigation management is policy has been announced, where the government will not file unnecessary appeals, which will be dealing with that also. Filing of updated returns, which is newly introduced section. Exemption being phased out gradually. I am not dealing with it specifically, but those people who are non-residents, non-citizens, they come to India for certain particular projects under a government contract or government agreement, as the case may be, they used to get exemption from their income, but now those sections which are there on the income tax book are being deleted, and those people who come to this country and work, irrespective of their status, In case if they're working in India and getting their money out, in that case, they will be taxed in India. I'm not going into the details because public at large, this is a public meeting. It's basically not going to be very technical on it. I'm very clear on that because no, I'm not even discussing a single section. To my chartered accountant friends who have joined this meeting, probably they may be disappointed to that extent that I'm not referring to any particular income tax section, but that is particularly the objective of this meeting, that this is the meeting for general public. That's the reason I'm trying to be as non-technical as possible. Provisions for charitable trusts and institutions are made more stringent, and scheme for taxation of virtual digital asset, that is cryptocurrency, that has been introduced this year. We'll be dealing with this. Incentives to medical professionals to be taxed in the hands of pharma companies, will be dealing with this also. It's basically a little disturbing section for an amendment, but be it as may be, that was the stand of government. I was telling you that certain amendments have been carried out by the government with a view that we cannot be wrong, we cannot be defeated. This is one of the provisions that has been amended, that in case if a pharma company is giving some kind of freebies, including samples to the doctors, one can always say that this is against public policy, nothing wrong into that. See, I'm not trying that the doctor should be bribed or they should be given anything free. But at the same time, there are certain things in any business you look at, every business has to have some kind of self-promotion. Okay, unless and until you have a self-promotion policy, you cannot sell products. And if you cannot sell products, ultimately the country will not in turn get good medicine companies to function. So somewhere government needs to understand that with all these curses also, there is still a vice somewhere, and you need to allow people to do their business in the way they wish to. Anyways, we are coming to that source to be provided into loan transactions, which I'll be dealing with. This is another thing, that in case if I'm taking a loan from someone else, now that person, how that person has got money will have to be proved by me. Extension of date for incorporation for eligible startups for exemption has been extended, and incorporation of manufacturing companies to qualify for concessional rate of tax, even 1 year has been given to them too. Rates of tax, basically there has been no change in the rates of tax as usual, up to 2.5 lakh rupees in case if you are an individual, man, woman, as the case may be, who are below 60 years. Including non-residents, you don't pay tax up to 2.5 lakh rupees, 5% from 2.5 to 5 lakh, 20% from 5 to 10 lakhs, and 30% in case if your income exceeds 10 lakh rupees. And in case if you are a resident above 60 years, below 80 years, then the exemption limit is 3 lakh rupees. And in case if you are a resident above 80 years, then the limit is 5 lakh rupees. Up to 5 lakh rupees, you don't pay any taxes. And then there is a surcharge. Surcharge is very, very taxing. In fact, it is something which is pinching, I would say, that needs to be taken care somewhere down the line. Because if you look at, in case if my income goes above 5 crore rupees, then typically the surcharge is 37%, and my tax rate goes as high as 42.8% of my 100%, which is too much. Okay. The other day I saw a video of our Prime Minister Sri Narendra Modi, wherein he was saying that people have not been showing more income, but it is very simple. If you tax them at such a huge rate, there is bound to be some evasion of taxes. Okay, so you need to understand that such a huge tax for these people who are earning well. See, it is not a crime that they are committing by earning more. Okay, I'm not in favor of them that now they should be benefited, nothing of that sort. But the tax rate has to be proportionately high. It cannot be significant. It cannot be almost double than what a usual person pays. Okay, that is what is pinching to the people who are earning high, and then they are setting up offices outside India, and they are doing business. They are not bringing in income in India. Is for this reason. Okay, so this is a serious thing which needs to be taken care of by the government. There is another set of provision which had come, another new regime that had come, wherein in case if you don't claim any expenditure, any investment benefit, etc., then you get further concessional rate up to 2.5 lakh rupees you don't pay anything. 2.5 lakh to 5 lakh 5%, and so on and so forth. Up to 15 lakh rupees you pay 30% tax. So this regime basically is a little beneficial as compared to this. So we have just of course this is not flowing out of the current finance bill. I'm telling you, these are last year's proposal which I'm discussing. There has been no change as compared to the last year. But since this is a public budget meeting, let people get benefit and understanding of what is beneficial to them. So in case this is the table that I've made, where parameters and whether I should, how can I, or when should I be opting the new regime is the thing which I have tried to highlight. In case if you don't have housing loan, your housing loan interest is 0, and your ATC, ATD, ATTTA, in the sense your PPF investments, your Mediclaim and your savings bank interest is say 1,85,000 rupees. In that case, in case if your income exceeds 13,60,000 rupees, then it will be better to go for new regime rather than the old regime. Of course, in case if you are a senior citizen or super senior citizen above 80 years, this 1360 may vary to an extent. I have not made it very complicated, just in order to make it to make you understand that in case if you go for this, in case if your income increases beyond 13,60,000 rupees and you don't have housing loan, in that event you can always go for new regime rather than the old regime, which is more beneficial to you. Of course, be careful that in that event you would not be entitled to claim your Mediclaim benefit or a PPF benefit or LIC benefit, as the case may be. This is what it is. Okay. Then in case, of course, you don't get even housing loan interest for that matter. Okay. Now, in case if you have a housing loan and you're paying interest above, means the interest of rupees 2 lakh or more. Now the deduction available to you is 2 lakh rupees, and considering other benefits of PPF and Mediclaim, etc., it is better not to go for a new regime, because at any point of time, in case if you have a housing loan and you're paying interest up to 2 lakh rupees, old regime is better than the new regime. That we have calculated, and I'm not going into the detail of it, but you can test yourself, or you can always consult your chartered accountants on that. Now, in case if your housing loan is not there, it's 0, okay, and your means you are in a small income bracket. In that case, income up to rupees 5,50,000, you go for old regime. And in case if your income exceeds 5.5 lakh rupees, then you go for the new regime. This is the criteria that usually is set for us, so that we can decide on the client as to whether to go for old regime or the new regime. Now coming to the cooperative societies, the tax rate is 10, 20, 30. I'm not giving more time on to this, for the simple reason that most of you may not be much conversant also, and may not be concerned about this. Okay, but societies alternate minimum tax this year has been reduced to 15%. That is one of the changes that this government has made for them. Okay, and the societies are also given concessional rate of 22% of tax, which is there, but I'm not going into the details, as I said. Of course, the surcharge, which used to be 12%, surcharge now has been reduced to 7%. In case of firms, there has been no change. You pay tax at the rate of 30% plus surcharge in case if your income exceeds 1 crore rupees, and 4% cess. In case of companies, again, we have a complex structure where you have 3 types of companies. If you are a manufacturing company, the incorporated owner after 1/10/2019 till 31st March 2024 now. Earlier it used to be 23, but 1 year extension has been given. So 24, in that case, you pay only 15% of tax. You need to be a manufacturing company, number 1. Number 2, you should not be manufacturing certain products which are in 11th schedule. Means I'm not going to the details of that schedule. You can always consult your ask your consultant on that. Okay, but it should not be a company which is formed out of purchase of old machineries. So if you already are a company or a firm, as the case may be, you incorporate a company and then you buy certain machineries, all these machineries from your old concern and start afresh. No, that is not permissible. You need to purchase new machineries only in order to qualify for the 15% deduction. Another set of taxation is 22% plus 10% surcharge and cess. So up to 25 and 25.168% tax. Most of the people now are going into that particular thing. In that case, the benefit is you don't pay minimum alternative tax, MAT. That is the benefit of this particular 22% and 15% is concerned. And otherwise, if you don't want to offer any of this, either of this, then the basic rate of tax is 25%. In case if your turnover for financial year 2021 is not more than 400 crore rupees, otherwise the tax rate is as high as 30% plus applicable surcharge and cess. So this is how it has been structured. Of course, then there is a cess and surcharge. In case if your income exceeds 1 crore rupees, then 7%. And in case if your income exceeds for 10%, then it is, income exceeds 10 crore rupees, then 10% surcharge is there, 12% surcharge is there. So somewhere we feel that taxation needs to be simplified, but it has become a more complex structure in case in this form. Okay, so it really confuses a person as to in which direction one needs to go. But this is how we have been, every government has been doing, even this government is not sparing itself from doing all these things. And complexities, as I said earlier, this law has become a monster law. It's too huge a law to understand and interpret. So where to go, even that needs to be understood and decided. But this is how it is. So be it as maybe, we go ahead. Now, relief in from higher surcharge, there has been a relief given in case of long-term capital gain. Earlier, long-term capital gain from shares and securities, your surcharge was STC, short-term capital gain. Your surcharge used to be more maximum 15%. Okay. Now this benefit has been extended to all the capital assets that you sell. Like even if you sell a residential house, let's say you are selling a residential house for maybe 50 crore of rupees. I'm taking on a higher side for the simple reason that I need to take those figures. Your capital gain is more than 5 crore rupees. Okay, you're selling your house for maybe 50 crore or maybe 25 crore rupees as the case may be. And your long-term capital gain is more than 5 crore rupees. In that case, you would have ended up paying the tax at the surcharge at the rate of 30% in addition to 20% of the long-term capital gains tax. Now, this has been extended to all capital asset. So even if I'm selling my residential house, in that case also, I pay only what you call 15% surcharge at the best. Okay. Next thing that has come up is dividends have been made taxable from last year. Now, people were not sure as to what's going to happen, but this year, last year, we have seen that because of the dividends, people have ended up paying more self-assessment taxes. Okay, and people who are not who are senior citizens or super senior citizens who don't have business income, they don't have to pay advance tax. Because statutorily they are not required to pay advance tax. But the people who are actually below the age of 60 and are earning dividends, okay, it is recommended that they start paying their advance tax because the burden of interest is so significant that people pay as high as 4 lakh, 5 lakh rupees because those people who actually have large dividend income, okay, and their tax now is they are being taxed at the rate of 30%. And because of that, this 30% tax on dividends, which was not actually the case earlier because dividends used to be exempt earlier. Okay, so now what has happened is dividends being taxable income. Simply speaking, because of that, interest means the taxation tax has gone high for them. Of course, dividend distribution tax, companies have not been paying dividend distribution tax all these years. They used to pay, but now the whole entire burden has been shifted. Now companies used to pay 20% dividend distribution tax, but now those who are in higher bracket, now they start paying tax at the rate of 30%. Okay. So to that extent, incomes of people have gone how high, which is taxable in nature. and because of that interest burden is high. So be careful on that and start paying advance tax. You still have one installment to go on 15th of March. You need to take care of this. Now we come to charitable trusts. There have been significant changes. Now this entire program has been sponsored mostly by the charitable institutions. Maybe some members from the charitable institutions are also there, I presume. I'll just give 5 minutes on various amendments that have been made for charitable institutions. Now it has been made mandatory for or compulsory for all the charitable trusts to maintain books of account. There used to be a provision in the income tax act that you need to get your accounts audited, but there was no particular provision to maintain books of account. So maybe some cases gone into court and they said that although there is a provision for audit, there is no provision for books of account. And if there is no books of account, how am I to audit? And accordingly, I am not liable to any of the penal actions, etc. And court might have agreed to that. And after 60 odd years, we have realized that we don't have this kind of a provision into the books or into the law that books of account need to be maintained. So now they have made it mandatory for all the trusts to maintain books of account. Then automatic approval route, which was given in the last year. Now certain checks and balances have been introduced where they in case if they find that there are certain specified violations committed by the concerned trust or institutions, as the case may be, then they will cancel the registration. And what are the violations? Income of the trust or institution has been applied other than for the objects. Income from profits and gains of business which is not incidental or attainment of the main object. Applied any part of income from property held under trust for a private religious purposes. Applied any part of its income for benefit of particular religious community. Any activity being carried out by the trust or institution which is not genuine or not being carried out in accordance with all or any of the conditions subject to which it was registered, and the trust or institution has not complied with the requirements of any other law or law, and the order, direction or decree by whatever name called holding that such non-compliance was occurred has either not been disputed or has attained finality. So tomorrow, let's say the trust is being penalized for any of the regulations which are not followed by them. All right. In that case, the registration of the trust could be cancelled. So you need to be careful on this. While if you are running or managing a trust, make it sure that there are no non-compliances. And in case for any reason, if you find that there are non-compliances which are found, it is better to at least appeal against them. That is most important. Okay, you be careful on that. There have been 2 hands raised. Bhavan bhai, can we take the questions last, or we want the questions to be taken right now? I'm okay in either of the cases.
So we can take last time at the end,
Okay.
sir. No issue. You can continue, sir.
Yet, if you
Once
feel
we-
that they need to be taken up immediately, I'm okay with it. Huh?
No, sir. We'll take at the end only. But we'll take the questions at the end. Thank you.
Fair. Okay, thank you so much, sir. Then, in case if there are violations found in the trust, then there is a flat rate of tax of 30% which is being introduced from this year. You need to be careful. Okay, only that part of income which has been applied or invested in violation of the provisions of the said laws shall be liable to be included in the income. Earlier, they used to say that in case if you are violating the provisions of law, then your entire income, let's say I'm earning 100 rupees. I'm giving an example. I'm earning 100 rupees as a trust. Okay, and I'm spending, let's say I'm supposed to spend 85 rupees out of that 100 rupees which is earned by me. Okay, now out of that 85 rupees that I have actually spent, let's say 10 rupees is spent for a purpose which is not for the object of trust. It is spent for the purpose, for the benefit of trustees, or it is spent for the purpose of religion, specific religion, which is not actually my core object. Okay, then that 10 rupees particularly will be brought to tax as income of the trust, and that's the end of it. Okay, and there will be penalty at the rate of 100% in case if you are found for the first time committing this kind of a violation, and in case if the violation is for the second time, then the penalty could be 200% of the tax. So this is what the provision has been. The message has been loud and clear that we will not tolerate nonsense. See, the trust, most of the trusts I have seen are doing fantastic jobs, but there are a few black ships in the economy, in the country. For that, everybody suffers. But this is how the country means. You need to make a rule for everyone. Okay, so this is how the rule has been made. Now, in case allowing certain expenses, in case if the exemption is denied, what used to happen that in case for any reason your exemption is denied, then earlier provision was that you will be taxed on the gross income. Let's say again, going back to the same example, I have spent 100 rupees. Out of that 85 rupees I was supposed to spend, I have spent, but I have made a violation. And violation is to such a huge extent that my entire exemption is denied. My registration is cancelled. Okay. So there was a provision that in case if your exemption is cancelled, then you will be taxed on 100 rupees. Now they have simplified this provision, very, very nice provision, must salute them, that it will not be treated as, of course, in case if the expenditure is in violation of the law, to that extent it will be treated as an income. But your 100 rupees will not be taxed. Only the balance that you have, 15 rupees, will be taxed in your hands. Plus whatever expenditure that you have incurred in violation of the law will be added to the income. So let's say 15 rupees I've kept aside will be taxed because my registration is getting cancelled. Plus 10 rupees that I've spent in violation of law will be added to my income. So 25 rupees. Now I'll have to pay tax on 25 rupees as compared to 100 rupees I would have paid tax on in case if my exemption had registration had cancelled. But now there are conditions that such expenditure is not out of corpus of the trust. Such expenditure is not from any loan or borrowing. Then I have claimed depreciation. In that case, I have not claimed the application of that asset. This is something a little technical. I'm not going into the detail, but you can get either the depreciation or application cost of an entire asset at one time. You will not get both. That is the message. Second, next is such expenditure is not in form of any contribution or donation to any person. Okay. So you cannot say that I'm donating it to someone else and that's the end of it. No. You need to spend it for the purpose of objects of your trust, and it's not a cash expenses. In that case, you will know, even if you are denied the exemption, even if your registration is cancelled, yet you would be given the deduction of all those expenses. Then voluntary contribution received by temples, mosques, gurudwaras, churches, etc. for repairs of the temple, etc. In that case, at the option of that particular trust or institution, as the case may be, you can set that entire repair. You can create a repair fund, okay, and you will have to use that repair fund for that particular purpose only. So earlier, what used to happen that there was no specific direction, specific law on that for specific direction funds. Like I'm creating a building. For creation of building, I need funds. So for that, I'm gathering money. So typically, it's not a corpus. So it is taxable in a way. Okay. But in case if I'm making a building, in that case, I need that fund because the building will be built over a period of 3 years or so. Okay. So I can create that corpus and spend that money for the purpose of building. So the condition is it's my option as a trust. I can keep that money aside and apply such corpus. It is corpus in inverted comma, corpus for the particular building or particular project as the case may be. So apply such corpus only for the purpose for which the voluntary contribution was made. It does not apply such corpus for making contribution or donation to any other person. Maintain such corpus as a separately identifiable asset, okay, and invests or deposits such corpus in the forms and modes specified. So if you fulfill this, then you can create a specific direction fund, keep it aside and use it over a period of time, whatever time period that you have chosen, okay, from the you can use it and that amount will not be taxed in your hands. Another thing that is a blow that has come on the trusts is whatever provision that you make for expenses, the expenses that you have incurred but not actually paid for, they will not be treated as an application or expenditure so long as it is actually paid by you. So what used to happen that, let's say I'm having 100 rupees as my income. I'm supposed to spend 85 rupees, but I've spent only 40 or 60 rupees. So balance 25 rupees I have not been able to spend. Okay, so people, instead of setting this apart for a particular period, they used to create provision for expenses. Like मुझे इसके लिए देना है, उसके लिए देना है. They used to create provisions and they used to claim the entire the income as means expenditure as 85%. Government has observed this and they said that no, it will not be permitted. Now, so long as you actually don't spend the money, it will not be treated as application of funds. So in case if you want to spend 85 rupees out of 100 rupees, then you physically spend that 85 rupees, then only you would get the deduction. Otherwise, you will have to either set it apart or you'll have to pay tax. That as simple as that. Now coming up is another thing, trusts and institutions will have to upload the information on donations received from 1/4/2022. In case if you are not able to do that, then the donors who give you donation will not be getting deduction under section 80G. So it is like the way TDS is there, you all are conversant with 26AS form. In case somebody from whom you are receiving income, they deduct your tax at source, they make your TDS and they deposit with the government. Once they deposit that amount with the government, you get the credit for that. Because means in case if they don't deposit or they don't file the TDS return, you will not get the credit for the TDS. The same way now all the trusts are supposed to upload the donation amount that they received along with permanent account numbers of the people who are donors. Unless and until that the particular return is uploaded by the trust, people will not get 80G benefit. So be careful while giving donations. Also from 1st April, you need to ensure that in case if you want to take the benefit under section 80G, in that case, you will have to make it sure that the trust is uploading the information on the website of income tax. Now, next point that we come is relief for COVID-19. As I said, Finance Ministry in the press release dated 25th June 2021 had already announced that in case if an employee gets any money from the employer for treatment of him or household as the case may be, then that particular amount will not be treated as a perquisite in the hands of employee. Okay. Then in case if I'm affected by COVID and I'm getting some help or aid by anybody or from some trust. Now there was a provision that in case if I'm getting help from the trust, any trust, then that amount was not taxable in my hands. But in case if I'm getting help from someone else, let's say so some people are making what you call advertisement on YouTube or so that this sector of people are affected by COVID and we are trying to help. We are not a recognized trust, but it's known as crowdfunding in the web. If you really look at the internet, the terminology, it's known as crowdfunding. So if you receive money from crowdfunding, typically it is not received from a particular trust. So that money that you receive would have been brought to tax in case if if this provision was not there. But because of this particular provision that you get any help or aid from anybody towards reimbursement of your medical expenses. Now it is not a case that you get 5 lakh rupees and you spent only 2 lakh rupees. Then 3 lakh rupees will be brought to tax. So you need to make it sure that whatever expenses that you incurred on the treatment of COVID, it is basically taken, it is being supported by the vouchers or the bills as the case may be from the hospitals or from the medicine shops or from the doctors as the case may be. So you need to be careful that it is not a blanket permission given to everybody, but in case if you receive this kind of money, it will not be brought to tax. And the same time, death compensation received from employer or any other person will not be taxed up to 10 lakh rupees. Okay, these are the three things which this finance bill is giving you benefit of. I'm sure and I pray that please don't make tax planning out of this. Okay, that I take some money and money by check and pay them cash. Please, in case if we do this, then there is no difference between us and the municipality fellow or the government official fellow who is taking money to hand over the dead body. Please don't make any tax planning. It's a noble move from the government, and we must salute that they have shown this courage to give this kind of a provision, this kind of a benefit to help people come out of the pandemic. So we must help and support government in doing this. Next is extension for startups. Now, in case a startup which was incorporated on or after 1/4/16, but before 2022, in that case, they were getting some benefits in tax. I'm not going into the details of startup, accepting the fact that your total turnover should not exceed 100 crore rupees, and you should be holding certificate from eligible as a business, eligible business for interministerial board of certification. If you get this particular certificate, then your income for next 7 to 10 years would be given exemption. Now, earlier this provision was up to 31st March 22 only, but now they have given one more year of extension, that even if as a startup you incorporate yourself by 2023 and you commence business, then you will be, after 10 years you get deduction of 7 years. It's a very good move. In case if you have some technological idea or some idea, as the case maybe, like all these people, this Grofers and Zomato, all are startups. Okay, so if you have this kind of an idea, you can always go in for this kind of a registration, and your income for next few years will be rendered exempt. So you still have 1 more year to actually go to materialize your idea. It's a good move. Then the same way, as I said earlier, concessional rate of 15% tax for manufacturing companies has been given. Now, last date for incorporation of this company was March 31st, 2023. 1 more year of extension has been given. As a 15% tax company, you have to miss on many other benefits that you actually get otherwise, but yet 15% tax usually is more beneficial. Now, if you look at the language of this section, let's say I'm an existing company, okay, and I've set up a new plant, okay, which with all together new machineries, entire new facility. Let's say I am at Rabale as of today, and I'm setting up another plant at Belapur or somewhere else. So both these plants have no connection. All machineries of old plants are with old plants only. The new plant has new land, new building, new machineries. But I'm an existing company. Now I'm an existing company after 1/10/2019 only. Okay, so I'm fitting into that criteria also. So I've already set up my one business, but that is probably not. That is one thing which is there. But let's say that particular business is not eligible. In one of our clients' cases, this has typically happened, that a proprietary concern was converted into a private company. Okay, so this was done after 1/10/2019, right? So because it is constructed out of the old machinery and old premises, I am not eligible for 15% deduction or 15% tax. Okay, but now I have set up completely a new facility. Okay, and because machineries are new, land is new, building is new, technically I'm entitled to this 15% tax benefit, but and even the law supports it. But what's happening is the return of income that we are supposed to file is not supporting this. So return of income says that either you pay tax at the rate of 22% or you pay tax at the rate of 15%, as the case may be. So now I'm in a position where I have to pay tax at the rate of 22% on my old business and 15% on my new business, but I am not able to do it. We are wondering as to what could be done about it. We are trying to represent but what I'm trying to say that this is also possible, that if you as an existing unit set up a new unit before 2024, probably you still have a chance to get 15% deduction. Of course, you should, the primary condition of registration after 1/10/2019 is must. If you are already incorporated before that, then you are not fitting into this. You should be careful about that. Now coming to the taxation of cryptocurrency for past 2 years, we have been seeing bitcoins and all these things, currency making havoc in the country and in the entire world. God only knows as to what this cryptocurrency is all about, or a few people who are actually dealing into trading into cryptocurrency. Basically, it's not a right kind of comparison that I'm making right now, but it is typically a case where you deal into derivatives on the stock exchange. I'm saying, at the cost of repetition, I'm saying it is not the right comparison that I'm making, but just for the sake of comparison, I'm telling that in case if I'm dealing into shares, if I'm buying shares of Reliance or Infosys or L&T as the case may be, then I am a shareholder of that particular company. I'm member, I'm owner of that company. And for any reason, such company goes into liquidation. At the time of liquidation, whatever surplus assets that are left, I'm entitled to get in my hands because of the distribution of those assets. But that will not happen in case of derivative contracts, because it's merely a contract that will expire over a period of time. So even if the company, of course, there is an argument that contract will expire any which ways. So you don't have to really wait for the money to come in your hands and you will get your money. But what I'm trying to say, it's an intangible asset. It is a derivative. It is derivation out of the share or Nifty as the case may be, which is intangible. Shares are tangible. I'm member. Here I'm not a member. The same way cryptocurrency is an algorithm created by someone, because means there is a way you create cryptocurrency. You do something and you get so much of bitcoins or cryptocurrency in your hand, and then you start trading in that, and the what you call the money, the value increases in your hands. Okay. But typically, you don't have anything in your hands. Tomorrow, if the company vanishes, entire investment of yours could go in vain. But this is how the things are. I'm not on technicalities of it. Let us understand what the provisions have come in force. The government in this finance bill they have defined as to what is a virtual digital asset. The cryptocurrency, they have named it as virtual digital asset. It is not an official medium of exchange or currency, and no legal recognition is given to crypto. Be careful. Moment this thing came into the budget, second day somebody met me and he said, क्रिप्टो करेंसी बिटकॉइंस को तो लीगल रिकॉग्निशन मिल गया ना, इनकम टैक्स में आ गया, दैट मींस इट इज लीगली रिकॉग्नाइज्ड. नो, it is still not legally recognized. It is not an official medium of exchange or currency. You need to be very, very specific on this. If you want to trade into it, it's completely a different thing. I'm not onto that, but it's not a legal medium or recognition given by the government. Just because something is taxed does not mean that it is legal. Even if you have a smuggling income, people used to smuggle goods, gold, etc. earlier. Even those illegal incomes are being taxed. So income tax is not concerned with an income which is out of official source or unofficial source. It is out of legal source or illegal source. Income tax is here to tax you on your legal income, whether it is from illegal means or legal means. You need to be very, very specific on that. Okay. RBI may also introduce cryptocurrency in form of non-fungible tokens, which we need to understand. Time will come and time will explain. Tax at the rate of 30% flat is being provided on the cryptocurrency, which is the new thing. So this 5%, 20%, 30%, nothing doing. Let's say you are dealing only in cryptocurrency, not doing nothing else. Then you will, if you earn 100 rupees, you straight away pay 30 rupees without taking benefit of basic exemption limit. As simple as that. Okay. Yeah, of course. I'm sorry. Basic exemption limit will be available. I'm sorry. I missed it. Basic exemption limit will be available, but not anything that 5%, 20% and 30% bracket you don't have to go for. Straight away 30% limit tax. you will not be getting deduction in respect of any expenditure other than cost of acquisition. So in case if you, let's say, buy a Bitcoin for 10 rupees and you sell it for 12 rupees, 2 rupees is your profit. Now, in order to earn this 2 rupees profit, you have incurred some expenses like conveyance, professional fee, bank charges, etc. Nothing will be allowed to use a reduction. Entire 2 rupees will be brought to tax at the rate of flat 30%. No other allowance or set off of losses against profits from cryptocurrency will be given. So let's say you are having business, you are having two businesses. One is cryptocurrency, another is textile business. From textile business, you have a loss, and from cryptocurrency, you have a profit. On that textile currency loss will not be allowed to be set off against cryptocurrency profit. No, you can't do that. On the same way, let's say you have loss in cryptocurrency. You bought the currency for 10 rupees, you have sold it for 8 rupees. And you have textile, iron and steel business wherein you have made profit of 15 rupees. Now 15 rupees minus 2 rupees, you cannot do that. On 15 rupees, you pay separately the tax on as your normal income. And this 2 rupees, which is the loss, you will not be given carry forward benefit also. So that loss lapses on an immediate basis. So that the saying heads I win, tails you lose kind of a situation is there. Government typically wants to discourage the cryptocurrency dealings. That's the reason why these harsh provisions have been enacted. Apart from that, you also have to make TDS at the rate of 1% on consideration. So whatever amount that you purchase, you'll have to make 1% tax deduction pay to the government. Okay. And in case of barter exchange, आपने bitcoins के सामने, let's say you are exchanging some other currency, cryptocurrency or something else as the case may be, yet TDS provisions would be there. And in case of barter, yet you have to make it sure that 1% tax on the consideration of cryptocurrency is paid to the government. Okay. Now, in case if you are in a business and you have turnover of less than 1 crore of rupees, or if you are in a profession and you have professional fee of less than 50 lakh rupees, in that case, you don't have to get TDS number in your hands. You can straight away, like you pay the TDS on property, in the same fashion, you may pay the tax. They will be prescribing a particular form, and you make payment of TDS on cryptocurrency from that form. Okay. For others, so, and of course the limit is 50,000 rupees. So in case if you are buying cryptocurrency from a particular person less than 50,000 rupees, then there is no tax deduction at source prescribed. And in other cases, like if you are in business having turnover of more than 1 crore rupees as the case may be, or more than 50 lakh rupees professional fee as the case may be, in that case your limit is only 10,000. So any purchase beyond 10,000 rupees, you'll have to deduct tax at the rate of 1% of consideration. And person who is receiving gift of cryptocurrency, if the person who is receiving the cryptocurrency as gift will be taxed unless and until that gift is out of from a relative. Now, we go to the next segment, which is prohibited expenses. Now, any expenditure incurred in violation of any law or rule or regulations or guidelines. Earlier, in case if I incur any expenditure in connection with violation of law, which is prohibited by law, as the case may be, then I was suffering the disallowance. Entire expenditure was disallowed. Now, new things have been introduced. In case if you are even violating the regulations or any guidelines, let's say you are a broker and you are violating some SEBI guideline, okay, or you are an investor and otherwise you are dealing into some insiders trading as the case may be, and you are penalized by SEBI, or some compounding fee is paid, or let's say you are a pharmaceutical company, and being a pharmaceutical company, you give freebies to the doctors, okay. Now, you give free samples to the doctors. Now, Medical Council way back in 2009 had resolved that the doctors will not accept samples from the pharmaceutical companies. Doctors will not accept any kind of holiday packages or anything of that sort from the what you call pharmaceutical companies. In that case, there was a circular from the CBTT which states that those expenses will be disallowed. Now, Mumbai ITAT in one of the cases said that medical council's guideline, which is there, it is restricted for doctors. It is not restricted for, it is not a restriction of pharma companies. Okay, and accordingly, the deduction was allowed. In view of that, this particular provision has come in now. Even if there is a violation or rule of or regulation or guidelines, as the case may be, in that case, the person, the pharmaceutical company, or any other person who is incurring such kind of expenditure, or maybe some compounding fee is paid, as the case may be, it will be disallowed in the hands of that particular person. Okay, you need to be careful about. Next is, in case if you violate any law in India or outside India. Earlier, the law, in case if you violate the laws of India, then only the disallowance was there. Now, even if you are violating our laws outside India, still there would be disallowance in your hands. In the same way, as I said, in case if you make some compounding fees or compounding of offenses, let's say you have brought an investment from outside, from external sources, like foreign direct investment, and you have violated some provisions of FEMA. Okay, and you have to say pay penalty. Instead of paying penalty, you compound your offense, or with ROC you compound your offense, as the case may be. That compounding fee now no longer is allowed to you as a deduction. That you need to be careful. This is applicable from next year, 1/4/2022. So financial year 2022-23, it will be applicable. Earlier, next is education says paid at the 4% is not allowed as a deduction. All these years we were thinking that this is never allowed, but in one of the cases of Sisa Goa, Bombay High Court said that education says that you pay will be allowed as a deduction, because it is the definition of tax does not include cess, and accordingly they allowed the deduction to them. Now this is a retrospective amendment from 2004 that cess and surcharge will not be allowed as a deduction. It's, and rightly so, nothing wrong with the amendment. It's not a vindictive amendment. It was always intended that, and nobody thought somebody वो बोलते हैं ना, कोई अचानक तिकड़म लगा देता है और उसने डाल दिया 4% cess, because this is not a tax, and it was allowed, but it was otherwise it was part of the tax. Fundamentally, education cess and the surcharge are retained by the central government for its own purposes. The direct tax revenue, income tax that we pay, that is shared between the state and the center, but cess and surcharge are retained by the center. Other amendments which are there are expenditure on exempt income. Even if you have earlier, it was a position taken by the courts that in case if you don't have what you call exempt income, then you will not be actually charged with or the disallowed the expenses on account of that. Okay, so there is a provision that in case if you have exempt income, then expenditure in connection with earning the exempt income will not be allowed to you. Okay, and the court said that in case you don't have exempt income, then nothing can be disallowed. But now they have made it clear that in case if I am not having any exempt income yet, it would be possible for them to disallow expenses. Goodwill is to be taken out of the block of asset. Last year they brought in an amendment that goodwill will not be depreciable. Depreciation will not be allowed to them. This year they have stated that the goodwill that is there in the block of asset needs to be taken out of the block of asset, and since it is taken out of the block of asset, it will be treated as transfer. And since it is treated as a transfer, there is a possibility that taxation will be there. Then this is a retrospective amendment. So let us say that March 20, you have taken goodwill, depreciation on goodwill. 21, it was barred, so you could not claim the depreciation on goodwill. Okay, and that goodwill now will have to be taken out of it. So whatever value that you take out of your block of asset, you'll have to pay probably the tax. This is what the understanding of ours is. But we are even investing, means we are making a research on that as to what is exactly the intention of this. But prima facie, it appears that this could be a case where there would be taxation on goodwill. A loan taken source of source, we already dealt with it. It needs to be proved. No set of I think okay, source of source. Let's say I'm taking a loan from Mr. X. Okay, now I have to prove that loan is taken from Mr. X. X is ICG test we call identity, creditworthiness and genuineness. So first of all, who Mr. X is, he's a taxpayer, his permanent account number is this, his return is this. That is the identity. Then creditworthiness, whether Mr. X is capable of giving me loan. Like I would received 5 lakh rupees, but Mr. X's income is itself 1 lakh rupees. Will it be possible for him to give me 5 lakh rupees? That is creditworthiness. And genuineness of transaction, whether the transaction otherwise is genuine in nature. Okay, then if I'm passing all these tests, then only I'll be getting the what you call the loan through, and it would not have been added to my income. Now I also need to go step further and X ka source of source. So now how Mr. X has got this money, whether the identity of the person who gave money to Mr. X is genuine, is identifiable, whether the transaction is genuine, whether the other person is credit worthy or not. So source of source needs to be proved, which is going to be very difficult and legally it would be very difficult for people to actually deal with it. And that too in the era of faceless assessment, it would be altogether more difficult. But this is how the provision has been made. Then next is no set of any losses allowed against income declared under search and survey. In case if there is a search or survey in your case and you declare some income, okay, in that case, if you try claiming some expenses against that, that will not be permissible anymore. You'll have to pay tax on the entire income. Then provisions pertaining to bonus stripping and dividend stripping now have been extended to all securities. Earlier, only bonus and units and shares were considered. Now all other securities are also covered under this. And in case if there is a stripping of bonus, in that case, it will be brought to tax. Now the last portion that I'm coming to is filing of updated return. A new concept of updated return has been introduced this year. We have original return that we usually file every year. Then in case if we find any mistakes in the return, we can always revise the return. In case if I missed the bus of filing original return, then I'm permitted to file belated return. Now there is a concept of updated return and there is a concept of modified return, which is there in merger. I'm not dealing with merger right now because it will be too technical for people to understand. So modified return is new thing. That is good enough for you to understand. And updated return, let us understand what this updated return is all about. Filing updated return of income by any person, whether he has filed a return previously for the relevant assessment year or not. So even if you have not filed the return of earlier year, you will still be permitted, and the case is the return, the period is time barred. Return is time barred. Okay, so let's say March 21 return can be filed up till 31st of March 2022, end of it. Or March 20 return now cannot be filed for the simple reason that it is time barred on 31st March 2021. And then there was some extension given up to 30th June or so. Let's not going into that. But once that return is getting time barred, that return technically cannot be filed. Now government says that fine, we will give you further 2 years to file the returns if you wish so. No worries. Okay. So let's say that I'm getting 24 months time and I have not filed the return, or I have filed the return, but I find that there are some mistakes. But the mistake, I'm not able to revise my return because the return is time barred. Even the revised return needs to be filed by 31st March 2021 only. Let's say I'm not able to file my revised return and 1st April comes. Then what do I do? So they have said that fine, you file updated return. Time limit for filing 24 months from the end of assessment year. For example, assessment year 22-23 return, updated return can be filed up till 31st March 2025. Okay, so as of today, presuming that this for particular finance bill will get the presidential asset somewhere in April only. If it gets in March, probably March 19 return can be updated. Otherwise, March 20 return can be updated after April. Okay, and March in this year particularly, and March 21 return can be updated after 1st April 2022. So these are the 2 years you will usually be able to update your return. Updation of return. Why? Because now government is coming out with information returns. Okay, TIS and AIS they are called, annual information statement and taxpayers information statement. If you find that some income which was there, you did not realize to offer that income. Now here you want to offer that income. So in an updated return, you can update that additional income. Okay, or if you missed the bus, you have not filed the return, then also you can file the updated return. So in case updated return is filed within 12 months from the end of assessment year, then you will have to pay 25% of your income tax plus interest as a tax liability. So let us say that your tax works out to 100 rupees plus 10 rupees, let's say interest is there. So actually you have to pay 110. Now, if you file updated return, that 110 into 25%, additional tax of that amount will have to be paid by you. So 110 plus 25% of 110 is your total tax liability. You pay and file that updated return. And in case if you file beyond 12 months, but before 24 months, then additional income tax to be paid at the rate of 50% of income tax and interest as additional tax liability. So this is how it has been structured. Now there are some prohibitions in filing this return. It is if it is a return of loss, then you cannot file. Okay, so let's say you have incurred loss and you have not filed the return, or if you have already filed the return but now you want to show some losses, that will not be permitted. It has the effect of decreasing your total tax liability on the basis of furnishing return. Even that will not be permissible. आपने समझो पहले 5 लाख रुपया 10 लाख रुपया इनकम दिखाया था, now you want to show 8 lakh rupees income, it is not permitted. Updation of return cannot be done. And third is results in refund or increases the refund due on the basis of return furnished. So ultimately government is saying that in case if you have a refund, then please don't come to us. If you want to pay tax, then only come to us with updated return. This is what the provision is all about. Okay. Then other persons who are prevented from filing updated returns are in case if a search or survey or has been conducted on you, or prosecution has been launched for that particular assessment year, or that is a notice issued by the assessing officer under PML, Prevention of Money Laundering Act, or notice is issued to effect that money, bullion, jewelry or valuable article things are seized or requisitioned. Notice has been issued to effect that any books of account, documents seized or requisition has been made. You have already furnished updated return. एक बार अपना updated return file कर दिया है, second time नहीं देंगे. And last is security scrutiny or reopening notice have been already issued. तो अगर ये हो गया है तो भी you will not be able to update the return. Okay. One more thing is TDS on property purchase. There has been a change. We all know that for past 15 to 16 years we are having this TDS at the rate of 1% on property purchase. Okay. Now TDS of 1%. If the value of agreement value exceeds 50 lakh rupees, then I was to deduct 1% tax and pay to the government. Now they have provided that not only the agreement value, but the stamp duty value or agreement value, whichever is higher, on that amount you will have to make TDS at the rate of 1%. So let's say my property agreement value is 1 crore rupees. Okay, and my stamp duty valuation is 1 crore 20 lakh rupees. Then the TDS will have to be paid not on 1 crore rupees, but 1 crore 20 lakh rupees. Okay, but let's say that there is a safe harbor rule provided in this case. In case if my agreement value is 1 crore rupees and my stamp duty valuation is 1 crore 8 lakh rupees, in that case it is within the 10% range. Okay, and if it is within the 10% range, then 1 crore rupees is the agreement value accepted by the government, because there is going to be some variation in the property prices. Okay, government acknowledges that, and that's the reason why this safe harbor rule of 10% is given. So my understanding personally is that this 10% difference which is there, it will not be brought to TDS. So let's say my 1 crore is my agreement value, 1 crore 8 lakh rupees is my stamp duty value. Since 1 crore rupees is acceptable to the government, in that case, I need to deduct tax not on 1 crore 8 lakh rupees, but 1 crore rupees. But in case if my agreement value 1 crore, my stamp duty valuation 1 crore 20 lakhs, in that case, I'll have to make TDS on 1 crore 20 lakhs and not on 1 crore rupees. This is what the provision that I understand, but there is no clarity on that. Probably government will come out with some clarification. I may be proved wrong or right as the case may be. That is of no consequence, but one needs to be careful on that. TDS on business, in case if I'm giving some perquisites out of my business, let's say I'm a holiday travel company and I'm giving some holiday to my agent because he has been able to attend some what you call some good business, and I'm giving him a trip to Australia which exceeds 20,000 rupees. Or let's say I'm giving some quantity discount, or I'm giving some other benefits, or customarily I'm giving some Diwali gifts, as the case may be, the value of which is more than 20,000 rupees, then I need to make ensure. And of course, the other person is also in business. In that case, I need to ensure that on that particular amount, I'll have to deduct tax at the rate of 10%. Okay, what used to happen? People were receiving gifts, but they were not accounting for that gift as income. So now they have brought in this amendment that the person who is giving gifts exceeding 20,000 as sales promotion, as the case may be, will have to deduct tax at the rate of 10%. And in case, let's say such perquisites are partly in cash, partly in kind, or let's say I'm giving let's say 10 gram gold, as the case may be. 10 gram gold will cost you around 50,000 rupees. Then I have to make it sure that the person who is receiving pays tax at the rate of 10%, that is 5,000 rupees, or I make the payment of 5,000 rupees, as the case may be, and that's the end of it. But otherwise, that this BART means can give perquisite in kind will have to be taxed. And provision shall not apply to an individual or HUF whose turnover or gross receipts are less than 1 crore or 50 lakh rupees in profession, as the case may be. So with this, before I conclude, let me thank my mentors who actually brought me into public speaking for last so many years. I'll thank Bharat Karabar, Dinesh Sampat, Nalinbhai Parekh, Praveen Namandar, Amit Doshi, Jagdishbhai Mithani, Rajiv, Luthia. These are the pillars on the strength of whom I'm actually standing today. Of course, and whatever I discussed today, we have a study group at Ghatkopar of we around 20 people we sat together for 2 consecutive days, discussed the entire proposal of budget. Of them are Maheshbhai Sharda, Manish Pasad, Soham Pandya, Rajiv Luthia, Atul Nathani, Dilip Nathani, Atul Mehta, I'm sorry, Atul Nathani, not Atul Nathani, Atul Mehta, Dilip Nathani, Hemant Mehta, Dinesh Sampat, Devan Shah, Pranav Kapadia, Deepali Mehta, Chandresh Gandhi, Sanjay Sardara, Paras Saula, Ravi Jain, Ashit Shah, Hemang Shah, Nalin Bhai Parekh, then Jayan Kothari, Amit Doshi, and of course I was there. So I'm grateful to all these people. Actually, they've brought a difference in my life. They've brought difference in my career. Of course, I owe a great deal to Ghatkopar Study Circle. For all these years, they have been giving me platform one or the other every year. And without all these people's support, probably I would not have reached where I am today. So we cannot solve our all problems with the same thinking we used when we created them. In case if I have not been able to come up to your expectations, I have not spoken something you wanted, or I have spoken something which you did not want, as the case maybe, I'm real sorry. Please forgive me. I love you all. Thank you so much. Thank you.
Thank you, Mehul, for the wonderful presentation. Mehul, some questions are there.
Sure. I'll just stop sharing so that we can see each other.
Yes.
Yeah.
Mehul, some questions are there.
Sure.
It is given in question and answer. Should I read the questions?
Yeah, please read, sir.
Yeah. So regarding your charitable trust, what you have taken first, will this apply to religious charitable trust? Means I think he must be asking that the question related to the penalties if it has not been used for the purpose for which it has been created.
Yeah, it is applicable to all the trusts across the board. Now, see what happens is religious trusts typically get exemption under section 11. I'm speaking something in legal language since the person is asking me a legal thing. So you get an exemption. Your income will not be taxed even if you are a even if you are a religious trust. What is prohibited is you will not be given the benefit of ATG. So that in case if you get some donations, you will not be able to issue ATG certificate to them. But if you are a charitable institution, or charitable means medical, education, or poverty, as the case may be. If you pay any, if you expend on any of these objects, then and you are meant for that, then you get ATG benefit. But in case of any trusts across the board, if you are penalized by anybody.
Hmm.
Okay. And if you don't defend yourself, then you had it. Then your income will be taxed. Your registration could also be cancelled.
I remember. I think Manish Bhai, Mehul Bhai gave an answer. Another question of Mr. Sekhar. I think 3 questions are taken. I will take the 3 question together also itself.
Yes, sir.
It is related to your cryptocurrency. Whether RBI's virtual currency transactions are also sought to be taxed. Question number 1. Question number 2. Can losses in cryptocurrencies be carried forward and set off? I think you answered already. And whether the cryptocurrency set off can be against profits of cryptocurrencies. Okay, means in that if internal losses.
Yeah, internal losses can be adjusted, like cryptocurrency to cryptocurrency. If I'm making profits or losses, as the case maybe, I'll be in a position to offset. But that profit, I'm not in a position to offset against, or the loss of other business will not be offset against this. The same way, in case if I'm incurring a loss, net loss on cryptocurrency, I'll not be able to adjust it against any other income. Okay. Coming to RBI's cryptocurrency, they are yet to notify exactly what will come in line. We don't know. In case if RBI really wants to make it big, they may give an exemption to that. But as of today, there is no clarity. At least I am not aware as to there could be clarity, but I am not aware about it. But as of today, as I understand, the cryptocurrency issued by anybody will be brought to tax at the rate of 30%. Now, Government of India gives some concession to RBI's cryptocurrency, then fine.
Another question: when is the 1% TDS on difference in the market value from agreement value? It should be deducted and paid to the dealing. Is it to be earlier of the date of first payment? Okay, means when to deduct this 1%, but what you suggested?
If you already entered into the agreement, then you don't have to worry about it. Okay. This rule is going to come, I guess, I don't remember exact date, but probably it will come from 1st of July 2022. Or maybe 1st April 2000. So I'll have to check that. Just a minute. Let me check immediately. 194 IC. I think this is coming into force from 1/4/22 as per the law. I could be subject to correction. It could be either 1/4/22 or 1/7/22, but you already entered into agreement, presuming, then you don't have to work on that additional differential duty, differential tax. It is only, see, as I understand one thing very clearly, that let's say your agreement is 1 crore rupees and your stamp duty valuation is 1 crore 20 lakh rupees. 20 lakh rupees will be treated as your income under particular section, as and you'll have to pay tax on that. Okay. Same way, the seller will also be taxed on that 120 and not on 100. That is the provision. Okay. So you'll have to deduct tax in case if you enter into this kind of an agreement after the particular date of 1/4/22 or 1/7/22, as the case may be, then you have to take care of it, not otherwise. I think this particular thing is already answered. Second is already answered. So let's go ahead.
Yes. I think questions are taken care. Participants, any questions are there? You can add on question answer. We can take 1 or 2 questions more. Yes, one question is came just one. Mr. Sanju Shah is writing that is TDS applicable on rental agreement also?
Yeah, TDS is applicable on rent agreement also. Yeah, I have not taken that particular thing in this. I missed probably. Thank you, Sanjay bhai. In case if I am having, if I'm paying, let's say, being an individual or an HUF not in business, I'm paying rent exceeding 50,000 rupees every month for residing in a particular place. Then I have to deduct tax at the rate of 5% and pay it at end of the year. That is 30. In March, I have to make the payment of that tax. Okay. Now there is some concession. Let me recollect. Concession is that missing on that concession this year. The one thing is there, they don't have to actually obtain the TDS number. Yeah, concession I also recollected, but they don't have to obtain the TDS number. They will be able to make the payment through 26QC form, if I'm not mistaken, at end of the year. Okay. And there was a provision introduced last year that in case if the person of whom I'm deducting tax is not filing return, then the TDS rate would be double or 20%, whichever is more. Okay. So people were finding it difficult. Let's say I've taken a home for home on rent from a senior citizen who is not liable to file the return because his income is so minuscule, so small. Okay. Now I have to deduct 5% tax out of him and pay to the government. Okay. Now, since he's not filing the return, I have to deduct 20% tax and pay to the government. So in order to give relief to all these people, in this finance bill, they have made a provision that in case of a person who is covered by this particular section, this additional doubling the TDS or 20%, whichever is higher, will not be applicable, and you continue paying 5%, collecting, deducting and paying 5% tax on the rents that you paid. This is how it is.
Well, just hold on. Piya madam wants to leave. So any questions related to economic, what we heard from Piya madam?
Bhavin,
Questions are there? Yeah.
Bhavin, can I ask one question to Mehul? Only 1 minute, if you permit me.
So I think Piya madam has to leave. So if possible,
Mehul, for Mehul.
yeah, agree. But Piya madam has to leave. The first speaker has to leave.
Yeah, we
His
have
request
to
if any
propose vote of
questions are
thanks.
there. If any question related to economics, then customer can ask her directly. Any question on economic? I think no questions. Rajiv, please continue. Yeah, you can ask her. Rajiv, please.
You'll have to give vote of thanks to her.
Taken, given, sir.
As a given, I'm sorry.
I think it's
I didn't. I'm sorry. Yeah. Yeah, Rajiv.
Mehul, you stated about that repair fund kind of a thing for a charitable organization.
Yeah.
The provision is there that trust can collect the amount towards repair fund rather than corpus, and with the condition that the same should be used for construction and repairs, etc. And fine, and that will not be treated as income, okay, of the trust for that particular. I have only two issues. One is, what about the donor? As a donor, if I give that, whether my ETG will continue, that's one fund. I'm giving it for repair fund of a particular building, okay. And second thing is about is there any time limit for using that fund by the trust? Because they keep collecting, and suppose they don't use for 5 years, 3 years, that is secondly about time limit. And third is about whether day-to-day maintenance purpose also, if they use the money from them, because repairs or renovations, they have returned. So whether what kind of, we mean to say kind of a huge, like we have sinking fund in the society. Is it like that, or we can use even for day-to-day maintenance? These are the three clarities.
Yeah, first is whether as a donor my ATG is secured or not. Yes, your ATG is secured in case if the trust has ATG benefit. Number two, the trust is uploading that you have given donation to me. Okay, then your ATG is ensured, no doubt about it, no problems. Okay, second issue that you raised is in case what is the time limit for which I am supposed to retain that money. They have stated that the way while you are treating this as a specific direction fund or specific or corpus in inverted commas, not typically a corpus that we actually look at from the trust, Bombay Port Trust point of view, but a corpus for the particular object. Now that object cannot be infinite. Let's say you are trying to make a building. Then the building will take how long? Maybe 2 years, 3 years, 5 years is the case may be, but not beyond that. So it cannot be a lifelong thing. You'll have to specify that this particular project I'll be dealing with, or I'll be making construction of within usually a 5-year period is treated as good period for all these kind of things. So if that be the case, then if you get this money for a particular period of maximum 5 years to my mind, because otherwise also 5-year period is given to you under the law.
But then we have no project on hand. We are just trying to create a fund in case of any exigency. I have no project on hand, but the life of the building is concerned. It's over a period will require heavy repair. So as a precaution, I am collecting. That is what is my question. I have no project on hand.
You have to have some kind of project in hand, at least some estimation. Okay. And the third question that you asked is, what did you ask, sir?
One is about deduction. Second, third is day-to-day maintenance.
Yeah, day-to-day expenses, you cannot use these funds.
Okay, fine.
It has to be for a specific repair and maintenance fund, like day-to-day expenses. If you make a fund, that it makes no.
So it is not at par with sinking fund, because sinking fund there is no time limit.
Yeah. So it has to have some kind of expiry, and you need to finish that.
Thank you.
Thank you so much. Thank you so much. Thank you for the sorry.
Just last question. So the speaker is asking source regarding loan opening balance shall also be asked. I mean that the said amendment is retrospective.
No, loan basically, it is not retrospective in nature, it is prospective in nature, number one. Number two is, let's say, even if after 2 years, the loan is outside opening, okay, and the matter is taken up for scrutiny, what they can examine is the loan received during the year only.
Okay.
So opening balance will not be able to touch. That is the law.
Understood.
For this particular purpose of treating a particular loan as income, they cannot go back to the, even in the current scenario, they cannot go back to the earlier year. They will have to treat the amount that has been credited, that has been received during the particular period of assessment.
Understood.
Okay.
Thank you, Mehul bhai. If you can say chat boxes, many comment has been received. It was good explanation you have given. And
Thank you so much
love
for the
to hear
opportunity.
you, and we always feel let's continue hearing, but because time constraints, just bring over here. Now I request Kavita madam to please give a hearty vote of thanks to Mehul bhai. Kavita madam, please.
As already so many participants had I'm able to be
Yeah, please continue. Please continue.
okay. Many participants has already wished our today's speaker for his presentation. Hence, we all must agree that our today's speaker has justified the subject so beautifully by giving a thorough explanation for each topic, by giving examples, and most importantly, he made the subject, this dry subject, so interesting by putting jokes, exact jokes of the situation. So on behalf of all the organizing association, I present a hearty vote of thanks to our today's speaker. Thank you, Mehul bhai.
Thank you so much. Thank you. Thank you for the opportunity.
It was wonderful hearing. Thank you. Thanks a lot. Thank you.
Thank you so much.
Thank you. Participants, we have our third sessions. Rajiv Luthia sir is there. Now I request Yogesh bhai. Yogesh bhai, are you there?
Yeah.
Yeah.
Can I audible?
Please, yeah, please. You are audible. Now I request Yogesh bhai to please introduce our today's speaker. Rajiv Luthia.
Yeah. Thank you, Bhavan bhai. It is great honor to introduce one of the good speaker. Has good command over the service tax, and now it's continued to the GST. As most of the members already know the Rajiv bhai. It is just a formal introduction of the Rajiv bhai because most of them knows him. Rajiv Luthia qualified as a chartered accountant in 1987. Is qualified as a DISA of ICAI, qualified as a LLB from Mumbai University of year 2015. Is practicing under the name of RG Luthia and Associates since 1987. Practicing in the field of service tax, GST as a specialized field. Delivery talks at seminar organized by the ICAI, WIRC, BCAS, CTC on the topic of service tax and GST. Contribution to the column of the GST law update in the monthly newsletter published by the WIRC. Contributor to the column of service tax law update in the monthly journal published by CTC. Is author various publication of the ICAI Delhi, WRC, ICAI and a BCAS on the topic of service tax and GST. I think so. Rajiv bhai, can you audible?
Yeah, I am. Yes, very much, sir.
Okay. Was opted as a member of the Indirect Tax Committee, Central Council of the ICAI for year 2010, 2012 and 2017. Was specially invited and convener of IDT Committee of ICAI. Was chairman of Indirect Tax Committee of the Chamber of Tax Consultants 2009, 2010 and 2015. He is a presently advisor to the Indirect Tax Committee of the Chamber of Tax Consultants and many more. Rajiv bhai, there is a number of pages. That's more introduction required. Rajiv bhai, this year budget is hopefully Mehul bhai given the guidelines on the direct tax, but hope this the guidelines on the GST, that's amendment in the GST, makes smile in the face of public. You better understand that. So with this great smile, we welcome Rajiv bhai as a speaker on the indirect tax. Session to you, sir.
Thank you, Yogesh bhai. You
welcome,
can
Rajiv bhai. You can use these slideshow.
1 minute.
The presenter. Slides option is there. Slideshow. My screen share options is sir. Insert design.
Press F5.
No, you are not able to see my screen at the moment.
I'm able to see the screen, but I'm able to see the means you can presenter view is not there. I'm able to see your screen. It is like a Word file, means you can up this slide show. Insert home, insert.
Rajiv bhai, press F5.
F5. 1 second. Sorry.
Yeah.
Function F5.
Yes, sir.
Yes, now.
Yeah, perfectly, sir. Sorry, sir. Yeah, continue, sir.
Now you can see, sir.
Yes,
Perfectly
yes.
right. Perfectly all right, sir.
Hello.
Yes, sir. Yes, sir. Perfect, sir.
Hello. Hello.
Yes,
Yes,
sir.
Rajiv bhai, અમે જોઈ શકીએ છીએ.
Yes, you can go ahead, sir.
Hello.
Perfect.
Go ahead.
Rajiv bhai, we can able to hear you.
Hello. Am I audible?
Yes, Rajiv bhai.
Hello.
You are audible,
Hello.
Rajiv bhai. You are audible, Rajiv bhai. You can continue.
Yes, sir. Sir, you can continue,
Hello.
sir. Sir, tomorrow problem. I think problem from his side. Hello, sir. You can continue, sir.
Rajiv bhai, you can hear us?
ठीक है.
आपण डायल केलेला नंबर सध्या व्यस्त आहे.
हेलो. हाँ, आवाज આવે છે મારો? Okay. Sorry. My apologies on a technical front. So good morning, everybody. At the outset, my sincere thanks to the organizer, Ghatkopar CACP Study Circle. This public meeting on budget is organized jointly with Forum of Free Enterprise, GSTPAM, and various other organizations. So thanks to all the office bearers of all these organizations for having given me an opportunity and inviting me from time to time, year on year, to share my thought on the indirect tax proposal, especially now the GST proposal on this Finance Bill 2022. Friends, we have a wonderful presentation from Mehul, and I also belongs to the same group which Mehul as regarding the study is concerned. And I also owe the same amount of credit I would like to give to each and every member. I would not like to repeat the names thereof, but it is a core group of Ghatkopar Study Circle which has really given me a lot of opportunity, and over a period I could able to climb the ladder with the support of each one of them. Friends, as regarding the GST, coming back to the topic per se, there are quite a few proposals coming up in the GST in this budget. Of course, during the talk of the finance minister, perhaps we thought like there is no changes whatsoever, nothing much has come in GST, but there are a couple of changes which are interesting changes also. And every budget is concerned, you will get views from the cross section of the community or the crowd. Basically, the ruling party will always say it's a growth oriented. The opposition party job is to always criticize. But from industry, we get a view from the top management, CEOs or chairmen, as the case may be, based on their thought process, how much benefit has been given. But what is the major change what we have found in about last 5 to 8 years under this BJP government? The budget is concerned is no more taxation related proposals are concerned, which used to be there. Number of proposals have reduced a lot over the years. About a decade back or so, the budget was looked after as mostly the benefits or the provisions related to taxations were many in those. As number to that, now the things have been much and more stability has come. Few amendments have been added year on year. Of course, during the course, based on the need of the economy, the provisions have been tinkered. So budget slowly and gradually, it is more on the infrastructure development, public welfare scheme. Those are the things are more been elaborated or rather addressed or taken care of during the budget. Well, friends, every budget has few good points. There are few one for to cheers for GST perspective. The first is the very, very important change which is coming up and very positive, that is extension of time limit for availing ITC. This was much needed. In fact, even when the GST was not rolled out, it was in a draft form. The various organizations, including Institute of CA, chartered accountants have already given a recommendation in that the provisions related to revision of the returns were, thrust upon, because the Maharashtra VAT was working so nicely with that platform, and a lot of support or background was taken by the government for rolling out GST, and the technological is concerned. They are seeing the experience which is faced by Maharashtra as regarding VAT is concerned. So there was a provision related to revision of returns, etc., in the VAT law, which has done away with GST. And the biggest issue has come up that human being is bound to make mistake, how to rectify. And more important is GST is concerned. ITC is the heart of the GST basically, and ITC. If you look at the majority of the services and goods are concerned, the rate of tax is 12 and 18%, which is not a kind of a margin businessman is earning in most of their businesses. So if you miss a bus on ITC, the ITC is concerned turn out to be a cost, and your profit will turn out to be a loss. So many people have missed the claiming of ITC because of the stringent deadline, which has been extended now in this budget. Then rate of interest is concerned. If you look at the direct tax law of such a old law, 1961 Act, we are referring even prior to the 1922 law. I have never seen the rate of 24% as a kind of interest, which is a compensatory in nature. But those where rates were there in for some time in the service tax regime, which was as high as 30% also. In GST, we have 24% rate on ITC, wrongly or well utilized, has now been reduced to 18% with a condition of utilization also. So this is a welcome move to that extent. And the next is this was retrospective, so that is also very important. This government is not believing in much of the retrospective amendment which we have experienced, and what all few have come, by and large, those are in favor of the assessee to that extent, so rectifying their own mistakes and agreeing to that in the benefit of this thing. So we must appreciate that part of it. And then transfer of your balance from electronic cash ledger of one state to another state. This is the most important, I would like to say, because we in India have followed a GST model of Brazil and Canada. It's a dual model federal government we have. And because of that, we have state and central GSTs concerned. This is not at all akin to the model in other advanced countries like USA, UK, and all the European countries. So our GST is completely based on Brazil and Canada. And thereby what happened, an assessee can have multiple number because of his presence in various states. And there is it's like any amount lying in your cash ledger or electronic cash ledger. It is neither tax or not a due. It's a deposit lying, just like your amount lying in a current account in a bank. It's your money, and you can use it the way you want it. You can take it back also. Okay, there are scenarios in many cases where you have a sufficient number of such surplus balance lying in the cash ledger of one state, and you require money for utilization for paying taxes in the other state, which was not possible. And it was only route was claim refund in one state and pay back in other state. That was slightly a long process. Now they are allowed with a one form they will be prescribing, and in a fraction of seconds the money will get transferred from one account to another account in the case of a distinct legal person, which I'll explain during my presentation. So these are the few very important points and which has come in favor of the assessing. Of course, there will be always gains as well as pains in the budget. The first is about the additional conditions being laid down for the availment of ITC, thereby restricting the availment of ITC, which is going to cost too much to the at least small and medium businessmen, and it will cause a lot of hardship as regarding their working capital requirements. So this is also is very important, which is going to work. And I think this is discouraging the business people. On one end, government says we don't want litigation, we trust the assessee, there is a self-assessment, but the kind of condition coming up of restriction, it shows that there is a less of the trust in reality. The restriction of utilization of ITC for discharging the tax liability, I am not seeing the word restriction in the law, because for the reason you can say that I am eligible, ineligible, that is all is fine, but restriction is something which is one step ahead, so making life more miserable on that front. More stringent conditions, rather more powers have been given to the officers to cancel your number suo moto. And this is, of course, there may be a few scrupulous backships in that as far as taxpayers are concerned, and they make a default with a bad intention, but every time not the case. And if you cancel the number suo moto, throw him out from the business. I personally believe that when somebody comes forward and takes the GST registration, he is actually interested in paying taxes, etc. one should not discourage that person. So this is not fair in my mind. Then interest charged twice on the same amount of ITC for a single default. This is absolutely not intention of the law, but the way it is coming up from the bill, unless it has been taken care of before giving assent to the bill, I think it is going to create a havoc and a lot of litigation in the court of law. And lastly, is the late fees also been prescribed for the TDS return to be filed by the electronic commercial operators. So electronic commerce operators, for them there was a penalty now been prescribed for the purpose of a late filing of TDS return. With this, we will start every provision in detail within the time allotted. The first is the most important about the ITC. Friends, when the budget was, GST was rolled out in 2017, our Honorable Prime Minister, Mr. Modi, stated that it is GST stands for Goods and Simple Tax. That's one. Secondly, one of the important feature, it has stated that it will give you a seamless credit. And that means you will, by and large, you will get credit for everything except some of the transactions which are prohibited. So like we understood that, yes, most related to business, you will get it. But if you ground reality, if you look into the way the section 16, when it was rolled out initially in GST, there were only 4 conditions. Over a period, the 5th condition was added, which is law of the land as on today, and now they have added 6 more conditions, 1 more condition. And so many conditions are coming up for availment level that makes the life miserable for a genuine taxpayers and his liquidity, and thereby ultimately the seamless credit turn out to be seems less credit to that extent. We'll see that is by these finance bill section 16.2 condition BA is proposed to be inserted. The bare wording of 16.2 is concerned. One minute, I'll the details of input tax rate in respect of the said supply communicated to such registered person under section 38 has not been restricted. So this is where the clause which is coming up in section 16.2. So they have given reference to a section 38. You will not be getting the credit of a transactions which are reflected in your to be as a restricted ITC based on section 38. You know, if I have to explain properly, you will each and every such parameters and slide it in the subsequent slide I have explained. Now today what happens is concerned, as a taxpayer, if you purchase a goods or service from any of the vendor, he files his GSTR 1 by disclosing the detail of the invoice which appears in your form number 2B after 11th of the month. And that much amount only you will be entitled to take credit, because that is a condition in section 16 to that extent. And then now what they are proposing is that there's a one more restriction will coming up, and that is based on the supplier's filing his detail under section 37, that is GSTR 1. The sum of the ITC which you are otherwise eligible will be restricted in that, and it will not appear in your doobie which is available to you for credit for the certain prescribed time limit. This is something very dangerous and which is really going to cost more. For that purpose, section 38 has been substituted. What 38 says that the auto-generated statement like form 2B will be communicated to each and every SSC based on GSTR 1 filed by the supplier. What detail it will contain? It will contain the details of all the inward supplies. Say, suppose I am purchasing good service from Mr. Mehul. So Mehul will be filing his GSTR 1 disclosing outward supply, which will appear in my GSTR 2B. The Mehul will file on 11th of the month latest, and I'll get it on my 2B on portal. I can see, but it will be auto-generated. And that will I can see after 11th of the month, and I have to pay, utilize that, avail the same before making payment of tax before the due date, which is 20th of the month. So detail of my inward supply will come. Secondly, detail of my supplies also will appear where I am not eligible to avail the credit, and that is for various reasons. And for that is also will appear. Now, there the various conditions and parameters have been set down. The 6 reasons will be given, and based on 6 parameters, 6 reasons, you will not be entitled to this credit. So these are the all 6 reasons. I would like to explain the same with the example. The first is as far as the vendor is concerned, if he is a newly taken registration, then for the prescribed period, his amount of credit will not be granted to you as a buyer. If he makes the default, in this entire example, I am explaining Mehul is a vendor and myself is a buyer. We take it that way. So if Mehul has newly taken registration, he supplied to me for some time initial period prescribed, I will not get credit even if everything is genuine. That is one. Secondly, if he makes the default of payment of tax, if Mehul makes default, I will not get credit. The second. Third is concerned if there is a short payment of tax. So if liability is 100 rupees and he pay only 80 rupees, or if he pay 50 rupees, then my credit also will be reduced proportionately to that extent. Then next is whatever liability he declares in GSTR1, Mehul declares, and ultimately he pays less in 3B. Then also my credit is getting affected. So this is how the conditions which have been laid down in section 38, which is newly proposed to be incorporated. In nutshell, if I have to say that all these are the sins committed by the Mehul. It's a violation from his front, for which there are enough provision in the statute to recover the tax, penalize him, get compensation by of interest from him. But why I have been made to suffer for no fault of mine, that we fail to understand. I fully agree that you give some time, say 1 year, 6 months or whatever, and thereafter if you can't able to recover the money from Mehul and if you reject my credit, that we can still understand. But there also there are enough number of decisions are there. We have a Bithal, DY Bithal case of Madras High Court is there. We have another case of a Calcutta High Court. Everywhere the government find very easy to recover that amount from the recipient and not making any of the actions or follow up against the defaulter vendor. Then in both these cases, the courts have stated that first go to the vendor who committed the default, make all the efforts to recover. If you fail, then only you take a recourse against the buyer for recovery this amount. So, but that is being given go by against by inserting this provision, which is going to be, once it is law of the land, you will find it very difficult to defend yourself in the court of law also. So I'll explain you in further detail by way of example. So now what will happen going forward? You will have form number 2B kind of thing. It will give you total credit. In that one additional column will come, that is a restrictive credit. And based on this parameter, which we have discussed just now in earlier slide. And that amount is, it is not that you are not eligible for it. You will be eligible, but it will not be given for the time being. So the time will be prescribed, say 1 month, 1 year, 6 months, whatever. I recollect those who are practicing excise and service tax in old, especially the excise. There was no provision on the statute those days, but still your superintendent or your commissioner will tell your manufacturer, don't avail any credit in the last 2-3 months, January, February, March, because we have to meet our target. So whatever your excise liability is there, kindly make payment by cash, because government wants to achieve its target of collection of excise. So that was something like a restriction. They used to restrict, but such provisions were not there on the statute. It was only on personal fund, whether it is a threat or request, that you have to decide. But there were instructions were coming up poorly, and thereby the industrialists or industries were not utilizing. Now this is finding place on the statute by section 38, and this is not the way the law should be drafted or administered. Then where is a seamless credit? Then it becomes seamless credit only. The next is ineligible credit, which will be reduced. That is perfectly all right. I am not eligible, it is reduced. And what is left out is eligible credit. So we are more worried about that second oval where shared the restrictive credit. Now let us show a person who, before availing the credit, will have to see so much of the details. He has to verify and find out and whether he has complied the condition, and then only he has to avail the credit. Because if he avail more than that, then he has not only to pay the interest, but the penalty, but he will be liable for 18% interest, which is also going to be very, very harsh. In the current rate, 18% itself is a very, very big amount of interest. Now let us take everything with one example. The first example condition here is, as far as in our example, Mehul is a vendor. So if he has taken new registration, then first condition is within such period of taking registration as may prescribe. So suppose he has taken registration in the month of March 22, then perhaps the government may prescribe that any supplies mailed by Mehul, being a new registered assessee, for first 3 months, his buyers will not get credit. That they will notify or they will may prescribe. So what will happen if I am purchasing anything from the Mehul for first 3 months, say April, May, June, the amount of credit will appear in my 2B, but I will not be allowed to take the credit in spite of the fact that Mehul has made the payment of tax to the government. He has complied. Every new registered assessee is not a defaulter. There may be few genuine defaulters. There may be few complied, and there are few fly-by-night companies also. Now, actually, the idea of the government to introduce this provision is to prevent that, or rather prohibit or catch the company who are just incorporated to misuse the credit, that is fly-by-night companies. But what is happening? Those are few in the number. Although amount is very huge, it is involved. But who is sufferer? Substantial numbers are sufferer because of no fault of theirs. So this is the first condition which will coming up. The second is concerned where vendor, that is Mehul, has defaulted in payment of tax for a prescribed period. Now he is an existing assessee, and if he is filing his GSTR 1, thereby his amount of supply appears and credit appears in my GSTR 2B. In this case, Rajpal Yadav has filed and it is appearing in the buyers, who is a Johnny Lever. Okay. And thereafter, Rajpal Yadav defaulted making payment of tax or in 3B. That means he didn't pay tax fully or partly. And that continues for say 1 or 2 months. Then entire credit of lever will be stopped to that extent. It will be in restricted credit. Now here, actually what courts have stated in those cases of DY Bithal, etc., that government has to make approach, make follow-up, take actions against the defaulter Yadav in this case, but not against lever. But then also lever will have to suffer because of the, so that means you are on one end, you will recover over a period, but the other person is deprived. So it is not out of the pocket. So you have to be very careful while selecting your supplier in the GST. The third example is concerned, your output tax payable as per GSTR 1 exceeds the output tax payable based on the supply declared in GSTR 3B. That means suppose in this example, Ram has supplied goods to Sham of rupees 10 lakhs and availed ITC, Sham has availed ITC say 18%, 1,80,000. But while filing 3B, Ram has declared only 5 lakh as supply. That means only 90,000 is paid. Then what will happen? Government got 90,000 less. Instead of recovering from Ram, it will straight away appear as a restrictive credit in the 2B of Sham, and his 90,000 will be blocked. So government will not be out of pocket. I appreciate that. But at cost of whom? The innocent guy. The person who is committed the violation or a crime to that extent is scot-free to that extent, but the person who is innocent or genuine buyer is made to suffer because in spite of no fault of his. This is the third condition. The fourth is concerned if output tax payable as per GSTR 1 exceeds the output taxable under 3B. This is a continuation to that third condition. Now here there is a section 75 subclause 12 is there, which says that there is a scheme of self-assessment, and it is every assessee, whatever he is declaring in his GSTR 1 and 3B is nothing but is a self-assessment. Okay. Now if the government is not happy with the self-assessment, there are enough weapons given to the government. They can carry out audit, there is an investigation, there can be an assessment, or there can be a search and seizure also. In any case, all those recourses are there, which they could have done it, but they have gone for the simple way, block the credit of the buyer. If that being the case, it will be only paisa hi paisa hoga, and you will have collection of 1,40,000 crore GST, which is highest. I am sure once this provision will come, this 140 record will not survive long. In a very soon, you will find 2,40,000. If you start blocking the credits, I am sure the collection is bound to go up to that extent. The provision intention may be good, but the way it is been percolated or implemented perhaps may not be a proper way perhaps. The next condition is the fourth one, which is when the vendor has availed the ITC in excess of eligible ITC as the case may be. Then by such limit, the credit will be blocked. What it tries to say, suppose vendor A, who has availed ITC of 10 lakhs in his 3B, for month of May, and the ITC as per his 2B is only 7 lakhs rupees. Okay, so that means to that extent he has availed more ITC of 3 lakh. Fine. So it is his fault. Government should have taken action against him. Now what happens in this provision is, Suppose this gentleman, Mr. A, has supplied some goods to XYZ Limited in that month of rupees 5 lakhs, and XYZ takes credit of the GST of 5 lakhs. But because Mr. A has utilized more amount of ITC, the government will block the amount to that extent of XYZ Limited. Okay, so it is again a fault of the vendor A. And who is suffering? XYZ Limited, who is a buyer. How you just tell me how the buyer will come to know that his vendor has paid his taxes properly by utilizing ITC correctly? How can you see? Just now Mehul has explained, you have to give source of the source. That means somebody is giving money. You borrow money for the business from someone. Now, when department carries out the inquiry scrutiny, you will have to prove that my lender has got a capacity, he has a source of income, everything. I think in reality, if you ask all those documents from the lender, you perhaps will get document, but you will never get money. So I think this is not fair. Okay, absolutely in that case. When you have everything transfer, everything available on the portal, you have enough machinery is there for years together. Same thing has been introduced in GST by this section 38 is concerned. Both are going at par, and this shows the less confidence. It's not a user-friendly environment being created, at least in GST when ITC is such an important part. So one has to strongly recommend, since there are various organizations who are hosting this program, you can send a representation, and the voice has to reach the government in the interest of the public. So friend, these are the few hardship provisions as regarding GST on 38. Of course, everything is not painful. There is something gained like extension, you get it. Everybody gets extension. Various provisions have come. The first of it is, as very important, was about the availment of ITC, input tax credit. As per the current provision, suppose for this financial year 21-22, you have any purchases of goods or services, you can avail the ITC thereof. If you miss out the bus, the last date is 20 October 2022. That means your return for the month of September. I don't say September, even if you for the month of August, if you file on 20 October, you can avail in that return. So basically what provision currently says that if you have some ITC of a 21-22 financial year, you can avail very much till 20 October by filing return for any of those months. Fine. Now that 20 October is too short, or date of filing annual return, whichever is earlier, but normally I have not seen anybody filing annual return before 20 October. Now in that case, why this 20 October justification? Because the most of the companies' accounts are getting finalized, completed, that is company audit, tax audit, which was before 30th of September as per the due date prescribed in income tax. But the ground reality in the last 3 years, COVID plus non-COVID years, the due date of conducting the audit as well as filing income tax return is always extended beyond. There is no corresponding extension in the GST granted. So your due date for audit was November, December, February, whatever. But that time for availing the credit still remain 20 October, and that is passed away. And many people have missed the credit. Now those were not the evaders. Okay, they were genuine credit. They missed the bus for whatever reason. So why you make genuine person to suffer? And if I have not taken the credit in time, where is the loss to government? Okay, if I take little more. So we were all representing, of course, I recollect WIRC and ICAI have always recommended in last 4 pre-budget and post-budget memorandum for this credit. Let us give a time limit up to 31st March of the next year. What is problem for the government? Okay, nothing is going to go wrong. They are not completing the assessment in 6 months and all. At least the voice has been heard to partially, and now that time has been extended up to 30th of November. Mind you, it is not the return for 30th November, it is a due date is 30th November. I think something is better than nothing is a solace we'll have to take. 31st March would have been a best call, because 30th November, if this is static date they have put, if the next year due date for completing audit and filing return is beyond 30th November, again, I think we are not of a better position. But still, effectively, you get 41 extra days to that extent. That is a welcome provision, partly. Half-heartedly, but it has come good. Section 16(4). Similar extension of time have been granted in other cases. Your GSTR1, that is a statement of outward supply. Your GSTR3B, which is your monthly return. any mistakes you commit while filing for any of these returns during your financial year, you can rectify the same. Earlier, the date was 20 up to September. Now it is up to 30th of November. Same thing as regarding the TCS returns. Like we have in income tax, we have TDS return, and based on that 16A is generated. Now, if you make a mistake, you can rectify without any time limit in income tax. You can rectify your TDS return 5 years back now also. Okay, but there is no such freedom, or you can say flexibility available in GST. Here also TCS return also you can only rectify up to 30th of November. Earlier there was time limit was stringent, at least some relaxation. The fourth part is time limit for filing a monthly return by non-resident. To my knowledge, we have 1 crore plus GST assessee. The number of non-resident assessee will be very few. It will not be even 0.1% of the total assessee, I am sure. And for them, the due date of filing the return for every month was given 20 days after the end of the calendar month. Government feel, why you want 20 days? So they have curtailed that date to 13 days. So 7 days short for them now onwards. Of course, it is affecting only few taxpayers. So you have to be very, very careful while selecting your supplier, because your credit is completely depend upon the action of your suppliers and who is filing his detail correctly in GSTR1 and thereby correspondingly paying his tax in 3B. You have to be more watchful. I will say that the government officer's job to that extent will be performed by you as regarding your supplier concern. Assessment to बाद में होगा, उनको 6 साल का time है government को for completing the assessment. But you will have to do the assessment of your vendor on a daily basis, at least to the extent of your purchaser from him. So if he say इतनी जल्दी क्या है कर देंगे, तो वो नहीं चलेगा, because then it is affecting your credit. And that is why corresponding this provision of 41(2) of GST Act, which is amended. And what this provision says, this 41(2) is completely substituted in place of old provision. Now it says that there is a provision for reversal of payment of ITC in case of a non-payment by the supplier. Now, if your supplier doesn't make the payment of tax, then the 41(2) said this to that extent corresponding ITC, if you have availed, will be recovered from you by way of a reversal. And not only it is ITC, it will be recovered with interest. That is something great. Like Mehul has supplied the goods to me in the month of March, and I have taken ITC of the same in my return in April, but Mehul didn't pay the tax. And then government will recover that ITC from me with interest. Okay, and that rate of interest is 18%. Earlier it was 24%. Now what will happen to Mehul, I don't know whether that amount Mehul pays, not pay, forget, my money is gone to that extent. Then further government said, don't worry. After we recover the money from Mehul, we will give it back to you. So it will come back to me. Okay, so my money is blocked. But there is no provision for interest. What will happen? Because when you are recovering the money from me with principal, you are also recovering interest. Suppose 100 rupees is recovered with 5 rupees interest. The recredit provision is there only for 100 rupees. What will happen to that 5 rupees interest? There is no provision in the statute. So what will happen unless you have such mechanism or statute provision is there? The government officer will not grant you the recredit of interest. So you will have to go to court of law, and then the basic purpose of the government will be defeated. They want less litigation. If such kind of provisions are there, how can you expect the litigation to reduce? So I'm sure before this budget will become act, this provision for interest will come. In fact, this provision is too harsh. Let me tell you, there is no limit also. Even for 100 rupees, they can do it. Okay, so that there is, at least small people should not be made to suffer, because they don't have so much machineries, manpowers, or software to keep a checks on their vendors. So at the end of the day, I can only say you have to choose your supplier wisely. I know Mehul is a very, very clean supplier. That's why I keep availing service from him. He doesn't make any default on filing of GSTR and 3B, and my credit always remain intact to that extent. You also need to find out all Mehuls when you are purchasing from goods or service from a vendor. The amendment 41(2), when it is being substituted, it is a blessing in disguise. The old sections was completely omitted, and new section, it is substituted with the next new section. Now, what is the offshoot of this? The erstwhile section 41(2), which provides that the amount of ITC standing to your credit, there is a restriction. You can utilize the same only for discharging your self-assessment liability. So suppose you have any balance on your ITC, you can use against your taxes which you declared in 3B, that is self-assessment, or any other taxes paid thereafter. Suppose you find in annual return some error, so you can file by using DRC03, so you can utilize that ITC. It is everything self-assessment. Based on that, what has happened, the matter has come up before Orissa High Court in one of the case. In the case of Jyoti Construction, they have filed an appeal against an order, and for that you need to make a pre-deposit 10%. For making this pre-deposit of 10% of the amount, they have used the money of ITC credit balance. Now, there was a petition filed by the government saying that this appeal is rejected because you have not paid pre-deposit by cash. Pre-deposit payment from ITC utilization is not allowed. The matter has gone to Orissa High Court. High Court has accepted, says that the section 41(2) does not permit, and thereby any pre-deposit if you make, you have to pay by cash only, and you can understand the position now. You have balance in your ITC account one end, and on the other end, you are making payment by cash. How much hardship it will cause to you on liquidity front, working capital front? That is one. Second way you look at that, if your issue involved is that of ITC only in the matter of litigation, and for that you are contesting, but you cannot utilize ITC for making pre-deposit. This is really a high, honestly speaking. Now this provision, suddenly it is in blessing in disguise, they have substituted, and that's why after this provision become a statute, you will be restored back, and you will be able to utilize the ITC for pre-deposit for years together in service tax and in the excise. We used to do it. There was no bar whatsoever. And what made government to introduce such 41(2), God knows, but perhaps there may be a mistake. If that being the case, it should have been allowed retrospectively. So this is a very good amendment, blessing in disguise coming up, section 41 subclause 2. The next part, Bhavin, it is almost 1 o'clock. Can I get 10 minutes or I have to close?
No, please continue, sir. 10-15 minutes to continue, sir. No issue.
Hello?
Yes, sir, you can continue for 10
minutes. Bhavin?
Yeah, sir. So you can continue for further 10 minutes. No issue.
Hello?
Yes, sir, you can continue, sir. You can continue.
Hello? Hello?
Yes, sir, continue, Karo. No issue. Continue.
Oh, sorry. Sorry. Yeah. Friends, thank you. I have been asked to continue for 10 more minutes, so please bear with me. The GSTR 1 and 3B are the two returns. 39 3B is a return and GSTR 1 is outward supply. Currently, you can file 1 and 3B for any month, even if your earlier months, any of the earlier months, such forms are pending on the portal. Now that means you can file your GSTR 1 and 3B for July, even if you are not filed for June, May, etc. Now that has been done away with. The new provision says that you will have to first construct first floor, then only you go to construct second, then only you construct third. That order you will have to maintain. So GSTR 1 and 3B of all the earlier months, unless you have filed that, you will be prevented or prohibited from filing the GSTR 1 or 3B of the subsequent one. I think this is a fairly good provision to that extent. The next is registration cancellation. This is too harsh to that extent. The registration cancellation suo moto by the department, some powers have been given to them in section 29. In that, two of the clauses conditions have been amended, one for composition dealer and one is for the non-assessee. As regarding the composition dealer is concerned, you know, it is governed by section 10, and for them currently composition dealer is concerned, they have to file only one return per year. It's a yearly return, GSTR 4, and the due date is 30th of the April of every financial year. year. That means for financial year 21-22, they have to file only one return on 30th April. The condition in 29 for suo motu cancellation says that if you fail to furnish this GSTR4 within 3 months from the due date, then your number can be cancelled suo motu. See in our example, 30th April is the last day. That means even if you want to file belated, then you should do it before 31st July. If you miss 31st July, then officer has got power to cancel suo motu, which will be very harsh. You have to be careful. And this is one condition. The second is if you are other than composition dealer, then also such powers are there. But currently it says that if you are not filed return for 6 consecutive tax period, now they will prescribe. So other than composition deal, they may say if you are not filed for 2 returns in due date, then your number can be cancelled. I think this cancellation is too much. You should make an attempt because person has voluntarily taken the number. There may be a couple of few scrupulous guys, but then others are for no reason being made to suffer. Bit harsh provision to that extent. What I mean to say, at the end of the day, you need to maintain a discipline like a military discipline if you want to remain on the GST or remain in the business. Once you are out from the GST, you are out from the business otherwise. Let us talk something about the refunds. Refunds are always dream come true if you get it in time without any harassment. Of course, on paper it looks very simple, but the ground reality doesn't match with the provisions which is drafted on the refunds are concerned. 54 is the only section we deal with a refund as regarding GST is concerned. Now here one of the provision in 54 says that first provision that in case if you want a refund of a money which is lying in your cash ledger is something, it is your bank account without any interest with the government. Anytime you want it money to be withdrawn, you can just take it back without giving any reason, any detail, any paper. The provision says that you can make such claim through filing your GSTR 3B, which is a portal, a written form. But in ground reality, there is no such clause and it doesn't work. The 3B may, if you file, refund never comes. In fact, you cannot file. There is only one option available, file RFD1 form. So now they have modified the law correspondingly. That means portal is immortal. Whatever portal says is correct. The law it has to be aligned with the portal. This is something like cart is ahead of bullock, and now they are rectified. So even for any refund now, it is going to be RFD1 form, procedural change. The second is concerned, currently the officer has got a power to withhold your refund if you have any due on any account on account of GST. But the provision was saying that officer can only withhold and adjust those refund which is arised on account of section 54.3. 54.3 gives you a refund only for the inverted duty structure or the refund to the exporters. Now, there are many other cases where you are eligible for refund. Wrong payment of tax, excess payment of tax, cash ledger, etc., etc. So now government has enlarged the scope of it. When you are claiming refund for any provision or for any account, and if you have a liability of tax on record as per government portal, then the first that liability or the dues will be adjusted and then net amount will be granted or issued to you by everyone. I think it's a fair to that extent. So government corrected their own mistake. So that the restriction which was there under only 54.3 has been made applicable for all the sections of section 54. The next is as regarding the due date of filing the refund claim, the time limit has been now prescribed. It will be from within 2 years from the due date of furnishing 3B. The suppliers of SEZ unit or developer, the refunds can be available. This is a time limit. Earlier there was no provision rather on the statute after 2019 to cover or provide for due date of claiming this refund. Now it is there on the statute. So it's a corrective error. Of course, we have a press release for that, but there's no provision on the statute, so it has now come. The next part is section 49, which talks about the late fee, and that is for a TCS return to be filed by electronic commerce operator. There was no such late fee in the law, perhaps maybe the omission. So now they stated that it will be 100 rupees per day, subject to maximum 500 rupees. Fair enough, it is GSTR1 TCS return by the e-commerce operator. This penalty or late fee has been prescribed. The next is, I'll take only last 5 minutes. I have only 3-4 slides to run now. But which is very, very important. And this is section 50 sub clause 3 about the interest. Section 50 is having three clauses. Section 1 talks about the interest on the delay in payment of GST, which is 18%. And section 50 sub clause 3, as currently worded, is on account of the excess undue claim of ITC, excess or undue claim of ITC, and the rate of interest is 24% as per the government's. Of course, there is a debate whether it is 24 or 18. That's a different thing. But 24 was recovered in most cases as on today. Now the problem here was on two accounts. One was a higher rate of interest, and secondly, word is interest was applicable even when it is you have undue or excess ITC claimed. Mind well, there are various things attached to ITC. One is about the availment, claiming, and utilization. All three are completely different. Now, ITC is my money. It is up to me when to avail and utilize. Unless I utilize, there is no loss to the government. It is still lying with the government unless I utilize. Now, interest is always been a compensatory. And to the extent you have used the money, like you take an overdraft facility from the bank of 50 lakhs rupees, you don't pay interest on 50 lakhs. You pay interest only to the extent you use the money. So if you have utilized only 15 lakhs of overdraft out of 50 lakhs credit, you will pay interest only on 50 lakhs. But unfortunately, on ITC provision, it says to the extent availed, so sanctioned amount. So now that has been corrected and will be applicable only to the extent you have utilized interest. Very fair. And such this issue was already confronted in past. This error was there in past also when we were in the Senvet credit regime under service tax. There was rule number 14 of Senvet credit rule having similarly worded, and the matter has traveled up to Supreme Court in the case of Swift Laboratories. And the law was amended thereafter, and it says that it cannot be, you cannot recover interest on the amount which is never been utilized. In spite of such kind of litigation traveling up to Supreme Court in the old regime, the GST provisions were not drafted in commensurate with that. So now that has been rectified. We must thank government for one reason here, that this amendment they have done it is done retrospectively. So that means now from July 17, you will have this provision, which is a very welcome provision. A human being is bound to make a mistake, no issue, but if it is rectified positively, one must appreciate that. So not only the rate is reduced to 18%, of course 18 itself is high, but it is better than 24 to that extent, and you will not be charged interest right from day one, 1st July 2017. Having done this amendment, I think only one thing which is missed out here is concerned. What will happen to a person who has already paid the interest at the rate of 24% in past? What about refund of that 6% extra interest being paid? There is no provision as on today. I am sure some notification or provision will come, and thereby they will provide some form or time limit to claim that. If that is not been done, everybody will have to move to the court for getting the refund, because there will not be any provision. So you will not get anything in the executive level, at first appeal level or tribunal level. You'll have to move to the court. I am sure government will do corresponding amendment to that extent. This another very interesting and very important provision beneficial to assessee about the interhead transfer of amount of cash ledger. Cash ledger, I am repeatedly telling, it is like your money lying with the bank account, is lying with the government GST bank without any interest. Assume that you are in a company having 3 offices in 3 different states, say Karnataka, Gujarat, and Maharashtra. And all the 3 places you have taken a number. You have a cash ledger balance in all the 3 state registration. Currently, suppose you need more money in Karnataka for discharging your tax, and you have enough money available in Gujarat and Maharashtra, but the law prohibited you to transfer the same. Okay, what you will have to do, you have to claim a refund in Gujarat, Maharashtra. Once you get the money, then you deposit in Karnataka. So that takes little time. It is your own money. Just think of, Mehul, if you have one bank account in Bank of India and another in the Union Bank, and you want to transfer the money, why it should take 1 month? It should take fraction of second by RTGS, correct? And it is your money. Same way in GST. So that is been now prescribed by this section 49. Thereby, now you can very well transfer the money from one state to another. What the law says, that means from Maharashtra, if you want to transfer to Gujarat or any other state, the CG balance cash ledger you can transfer in 1 second by filing one form which will be prescribed, and it will go to Gujarat CG account. But it is ultimately your account, your money. Same way, it can go to CG of Gujarat, or vice versa. IG of Maharashtra can go to Gujarat CG, IG, etc. Only thing is, it will not go from Maharashtra CG to Gujarat CG because it is state government. Now, for that, what you will have to do is, first ensure that Maharashtra CG to Maharashtra SG is transferred, and thereafter you can correspondingly transfer to Gujarat, so that you can do it. But everything which was taking more time can happen in less than 5 minutes from here and there by once it is on the portal, and if you can access the portal once the form is. This is an excellent change, most important and most welcome, and it's a taxpayer friendly change without any loss to the government. The 4912 imposes a restriction on the assessee. Government can restrict usage of ITC for discharging service tax liability by certain percentage. While this is a provision which is really very bad in a spirit, because currently this is very much in operation, but there is no statute. It's only a rule which is there. And 86B from 1st of January 2021. I'll just give example. If tomorrow today it is been specified that minimum 1% of your tax liability you must pay by cash. That means if Mehul has 1,000 rupees tax liability for this month, he can pay it by utilizing ITC maximum 990 rupees, 999 rupees. Even if he has 2,000 rupees balance, he will not be utilized. He will get utilized only 999, and 1 rupee has to pay by cash. So on one end, you will have collect balance available in ITC credit, but still you will not. That means you are hungry. The lunch is there in front of you on your table, but you are not allowed to eat. Okay, so something of that kind, which is not, should not be the purpose. But anyway, 14 and 12 is a such provision which has come. So, and last slide is, there are certain provisions which are there in the statute but never become operative. That is section 42, 43 and 43A. And basically these provisions are related to the original scheme of GST, prescribing GSTR 1, GSTR 2 and GSTR 1, 2, 2A, 3, 3A, which was the original scheme in which the GST was to be rolled out, but really 1 has become operative, but 2 and 3 has never become operative. So those provisions have been done away with because government, I'm sure they have failed to create the portal to match with the expectation of 42, 43, 43A. So those are completely been done away with to that extent. So friends, within the time I have covered almost all the relevant provisions. In nutshell, if I have to conclude that we are, as regard GST front, we have to do a lot of compliance with the deadline. You have to forget about TDS provisions, but otherwise normal person will have to file his GSTR 1 before 11th of the month, otherwise there's a late fee every day. Not only late fee, your buyer is a sufferer because he will not get credit. 3B you have to file by 20th of a month. Everybody, irrespective of the turnover, except composition dealer, has to do on a monthly basis. So sometimes the small dealer also who can't afford full-time accountant also will have no option but to file it on a monthly basis. And with that, more and more compliance conditions coming up in GSTR 3B for availing ITC, etc., our life will become very miserable. We'll have to have a discipline more than a military kind to comply. So in that case, a voluminous client, if you're handling, I think it is 24/7 crematorium kind of office you'll have to work for. Otherwise, it will be very, very difficult to comply. Anyway, I was slight harsh on that, but the consequences are such that you cannot afford. Because of your mistake, other is suffering. If others are suffering, they will throw out you of the business. Well, friends, that's all about from my side on the GST proposal. My sincere thanks to all the organizers for having given me an opportunity. And there are one request from my side to all the organization. There are few provisions which are really tax friendly, you must write to the government in a capacity of organization, thanking them for those such a good provisions in few cases, but simultaneously please draw the attention and give your hardship wherever there are very harsh provisions have been introduced and which are going to work, and there is no business friendly environment. Unless you write it to the government, draw their attention, you can't expect government to react on it. So this is a humble request. Sincere thanks to each one of you. Thank you very much.
Thank you. Rajiv, thank you. Thanks a lot. Shall we take some questions? Rajiv, can you hear me? Hello, Rajiv.
I'm done with. Hello.
તમને અમારો નથી આવતો, તમને મને લાગે છે અમારો અવાજ.
હા,
We
મને
can hear
નથી
you. Fine. તો હું ક્વેશ્ચન પૂછી લઉં ફોન પર, તમે આન્સર આપી દેજો. So ના કઈ નહીં કરો. આ ચેટ બોક્સમાં જઈને ક્વેશ્ચન્સ છે જુઓ. તમારો પરફેક્ટ આવે છે, તમને મારો નથી આવતો. I don't know, any problem છે. We can hear you sir perfectly. So I will ask you questions. Yeah.
Friends, there is some technical issue at my end, so few questions are there, which Bhavan is asking me, and I'll be responding. Yes, sir. Yes, Bhavan.
Yeah. Sir, Bharat Bhai is asking, due to heavy restrictions of ITC, do you feel that there is a good case of availing compulsion scheme for small registered persons under GST? Any view, sir?
Friends, the question here is concerned. I need not repeat the question, Bhavan.
Yes, sir. Yes, sir. No, not required.
So see, composition scheme, I don't say that you should opt for it based on the restriction. I never say that. Okay, I only say because composition scheme may not be fit for everybody unless you are in a retail trade, because your recipient want the credit. Okay, and if you are a composition dealer, then why the hell he should come to you? Because you will pay whatever amount of GST which I am not getting a credit for the same. What the message I was giving is, choose your supplier wisely. You can do one thing. Whatever is your payment condition with your supplier, say down payment, 15 days credit, 2-month credit, whatever. Okay, you tell him I will pay that amount, but I will not pay the tax component unless and until it appears in 3B. So once it is appearing in 3B, then at least you are to great extent relaxed, and you will able to get it. That is the only way is solution. Of course, you can check up case to case basis. Sometimes composition scheme is work, but barring retailers, I don't feel composition scheme is good. And there is a turnover limit also. So if you have turnover beyond that, you are not eligible also. That is the other part.
Fine, sir. I think one opinion is given by Ashok Bhatt that November return can be filed till December in case of monthly, or January in case of quarterly. So GTR 9 or 9C due date may also extend to till January. This I think is opinion to extend 9 and C date.
Possible.
Fine. And the question is, if credit is available in credit ledger, then no interest is payable or now payable. If credit is available in credit ledger,
yes,
then no interest is payable or will it be payable?
No, if there are two things. If credit is eligible appearing in 2B, okay, then you can avail and utilize. See, because there will be 3 columns. One is total credit, one is a restricted credit, one is credit not eligible, and net eligible. So net eligible is your right. Nobody will charge any interest penalty, because that is government themselves say you can use this. Now it is up to you to use to that extent. You cannot exceed more than that. If you avail and utilize more than that, then only you have to pay interest. So in nutshell, wherever there is a doubt, dilemma, please don't utilize.
Okay.
Only you avail it, no issue.
Fine, sir. So now, as the rate has now been reduced from 24 to 18 on ITC credits, so if you already availed in suppose previous amendment, if you already availed and we have paid interest of 24%, can we ask for a refund of difference?
Yeah, that is what I stated. No, you will have to ask for the interest refund, but as on today, there is no provision of the statute in the finance bill. So the refund is concerned, if they don't provide for a procedure, then you will have to go to the High Court only, because there is no provision in the law. You have to ask, sir. And I'm sure there will be provision coming up.
Fine. Another question from Rajesh Sirsat, that interest is payable if our supplier is reported sales in GSTR 1 of January 22, and we filed 3B in Jan 22, pertain to May 21 to December 21. I repeat, if interest is payable, if our supplier has reported sales in GSTR1 of Jan 22 and we filed 3B in Jan 22 pertaining to the period of May 21 to December 21, means the 3B pertaining to May 21 December 21 I have filed in January 22 and our supply is also sold in GST1 in January 22. So we are able to claim the credit.
See, there are two things coming up. First of all, there is a default on the part of the assessee who has availed the credit. Here, see, you have availed and utilized credit only when you declare the same in GSTR 3B. Unless you declare the same, this is nothing. In the sense, it will be treated as neither availed nor utilized. So it is 3B when you are filing beyond the due date. That means there is a default or delay. You can't say mera credit mein balance pada hai. But of course, one thing is that there is a provision which is inserted in section 50 with the last budget, that whatever returns you are filing, even if delayed filing of the return, and if you can demonstrate that there was enough credit available with me, which I have utilized for discharging the liability, the interest will be charged only on that amount which you have paid by cash, utilizing cash. Okay. So on the credit portion, you will not be charged the interest even in case of a delay, but this is restricted only in case when you are filing the return in 3B. That is one. And as regard your vendor is concerned, from his side, whatever delay is there in filing 1 or 3B as the case may be, the interest and all the consequences will come on him. It is through this additional condition, which is now inserted in section 16 as per section 38. For the time being, interest amount will be recovered from you along with tax. I already stated that you will able to recredit the interest, tax. But about the interest, there is no provision available for recredit, and which during my presentation I have stated that there has to be some provision which will come. If it is not come, it will be a big cost to the assessor.
Yes, sir. Some others are in name of suggestions, like if there is no reasons of GSTR 3B, if there is no reasons of for GSTR 3B and 3 and GST1 differences, how recipient is hold responsible for restrictions?
No, I'm not able to.
Yeah. So,
I could not understand the question.
There is no reason GSTR 3B and 1 differences. How recipient is hold responsible by restrictions?
See, the supplier.
Yeah, sorry.
Supplier GSTR1, if he declared turnover of 1 crore and 3B may declare turnover of 60 lakhs. So that means as per GSTR1, your more turnover, government will presume that you have liability on 1 crore. Now, if you don't pay liability on 1 crore, that means they say there is a less tax paid by you. It's a presumption which is there on the statute. And thereby you will be deprived. Now, the reason, etc., let that assessee go and explain. But they will immediately prevent you from taking credit by putting that amount in restrictive credit. You have to ensure that whatever supply you declare in GSTR1, the same should appear in 3B. If it is not appearing, then you will have to suffer the consequences which is prescribed in the law.
Understood, sir. Right. Participant, any more questions? They can write on the chat box. We can take 1 or 2 other questions. Fine. No more questions. Now I request Yogesh Panisal to give a lot of things. Sir, phone on rakho tan samray sir.
Sorry, sorry, problem.
Yogesh bhai.
Yeah. Can I audible?
Yeah, please.
Yeah, thank you, Rajiv bhai, for this wonderful session. As number of comment already full with only word as fantastic session, which is more than a Q&A already taken. So nothing word added to that. As GST is a baby tax of 3 years, but very much popular in everybody's mouth, like a Temur Khan baby of Kareena Kapoor in Bollywood. Even in budget, lot of claps was made in the revenue in the GST tax reaches more than 14 lakh crore in last month. Sorry, 1.4 lakh crore in the last month compared to any other announcement. As this is a growing with a lot of amendment daily, as professional we have to update. But for the businessman, this amendment is backing lock in everyday time. With this session, and like you as a mentor, all businessmen, student, and even a professional will understand in depth this subject, intention of the government to move further in the indirect tax regime. Thank you once again, Rajiv Bhai, for this wonderful, understandable lecture on subject with all example and explanations. As rightly told Mehul Bhai, this government making easy way of recovery of taxes from the public's pocket, of that no one feel burden, and this all happen with amendment and gaps that you understand thoughtfully. Such all explanation rightly by Rajiv Bhai. Thank you very much. Thank you once again. Now session to the Bhavan Bhai.
Thank you, Rajiv. I hope you're able
And
to.
thanks to the organizer from bottom of my heart, to all the organizers for having invited me year on year. Thank you very much to all participants also for your best wishes. Thanks.
Thank you, Rajiv Bhai. Thank you. I hope you heard the vote of thanks given by Yogesh Bhai.
Now I am very much connected. My sorry, technically I am poor. Growing old now. This shows the sign of growing old.
Now coming to the closer of the sessions. Thank you all. And first of all, thank you all. Thanks to all the three speakers, namely Piya Madam, Mehul Bhai, and Rajiv Bhai, for taking your time and giving the explanation thoroughly. Piya Madam has given the perfect explanation on economic side, his odds and outs, everything. Mehul already told about direct taxes. Revenue comes, revenue goes out. All the amendments which are there, which are the advantage, disadvantage, both are there. And as well, Rajiv Bhai also gives a fully explanation of GST. We are really thankful to you, all the speakers, as well as I'm thankful to the other organizations who have taken the part. I'm really thankful to you, and also always thankful to the members. The members were there, participants, more than 120 participants were there, and we are really thankful to all of them. Thank you once again. Thank you all. Thanks. We are closing session. Thank you. Thank you, sir. Thank you.
Thank you. Thank you very much, sir.
Thank you very much. Thank you.
Thank you.